Hello and welcome to the Trick Trades Accelerator Strategy, a strategy of day trading options. So I have always had a problem with trading options. I'll just give you a little, we'll start off with a little bit of background. A lot of people really overcomplicate options, and I promise you, by the end of this video, you'll be able to trade options with confidence and without having your eyes roll in the back of your head. Day trading options and options in general can be very confusing. I promise you, this is not confusing whatsoever. You're gonna absolutely love this strategy. It's a strategy that not too many people don't really trade options this way, and you'll see why. I don't use a lot of the same principles as the majority of options traders. I actually don't consider myself an options trader. I am a mainly an equities trader. I've been trading equities for 7 years, professional full time for four now, and a little bit over four actually. Um, and options is relatively new to me. Now, before you get scared away, I've back tested this strategy, and the strategy is very sound. I actually don't know why a lot of people don't trade options in the way that I do. They really get caught up with, you've all heard these, the iron condors and the iron butterflies and uh, uh spreads and this and that, and all those strategies they're very confusing, right? So I just got to get something fired up here, but um, yeah, it's a very simple strategy, and I know you guys are going to enjoy it. So my background is, like I said, I've been a trader now for 7 years, 4 times or 4 years, a little bit over 4 years professionally, full time, and my background is I am a contract welder. I owned and operated my own welding truck up here in the Alberta oil fields for years. For as far back as I can remember, I wanted to be a welder. And up here in Alberta, for those of you that may not be familiar with it, it's really good money. It's the type of money that doctors and lawyers make, relative to I guess in the states. So I've always done fairly well for myself. I had a successful business, and it was hard for me. People ask, well, why did it take you so long to go full time? Well, bottom line is, it's pretty hard to give up a guaranteed, two to $300,000 income a year, right? It's pretty hard doing that. Um, so I finally just had enough of the way that the industry was headed, and I had a little bit of money saved up, and I just decided to take the plunge. If I was going to do this, I was going to do it full in, all in. And it's been a wild ride. Lots of ups, lots of downs. Very stressful at times. But all in all, I wouldn't trade it for the world. I love what I do, and now running Trick Trades. Uh, wow. I mean, I'm blown away at how good life can be as a day trader. Now, I'm not talking about all of those flashy, fancy cars that you guys see, these other guys post, but just the fulfillment that I get out of teaching people and properly educating people. That's why I opened up Trick Trades, is because there's a lot of bad information that's just nonsense. A lot of people just regurgitate information because they've heard someone on Twitter say it, or it's ridiculous. Um, but I know that you guys, that's enough about my background. I have YouTube videos and podcasts where you could check out more of my backstory, and we'll get into the option strategy. So I think, like I said, to start, I need you guys to understand that this is not a traditional way of trading it. We are only going to be trading um, very basic calls and very basic puts. Now, for those of you that don't know what those are, that's fine. This is a complete strategy that I'll take you from A to Z. Okay. So we'll go over terminology and everything else. And don't worry, I'm not going to bore you to death with all of the Greeks. There's only a couple Greeks that I use, and that's it. The rest, it does not apply to us whatsoever. We're day trading these options. We're not looking to hold these overnight, although you can, and it's fine. And I'll show you something here on even Amazon. This setup right here, you definitely should have and could have held it overnight for pretty big gains. Um, so like I said, I want to point out now I use Trade Zero as a brokerage. I'm up in Canada, and I know that it is offered in the States. It is under the PDT rule in the States. Up here in Canada, it isn't. That's not the reason why I went with Trade Zero. The reason why I went with Trade Zero is because when I first started, I was shorting pigs, penny stocks. I have no desire to trade penny stocks anymore. I find there's too many new traders that they they use far too much size and they mess up the price action because they're in too big and they get freaked out. I have no desire to trade those anymore. The market leading stocks such as Apple, Amazon, Nvidia, Facebook, Tesla, Twitter, all of it, like those traditional stocks, Microsoft, Intel, they're so easily traded. Netflix, they're so easily traded because they follow the rules. It's mainly professionals that trade them. Okay, so since that's your edge, a certain someone out there likes to have you believe that you do not have an edge in trading these higher price stocks because institutions trade them. Well, let me tell you, because the institutions trade them, that's what gives you your edge. They're so clean, they move so clean, it'll blow you away. Um, it's very easy. They're very predictable. I shouldn't say easy. That's definitely the wrong word. I don't want to put that across because trading it can be very difficult at times, but it's about finding the right strategy and the strategies that work for you. And I do believe that you're in the right place here with myself, Pat Mitchell, and with Trick Trade. So I do want to pull in something. Okay, do you see all these different? These are all different strategies that you can use as an options trader. Yeah, vertical calls, vertical puts, calendar call, calendar puts, straddle, strangle, butterfly, condor, iron butterfly, condor, and then you can customize the strategy. Wow, this is all I use. Single leg. And all that means is if I am willing to if I'm thinking that the stock is going to go up, I buy a call. It's like going long a stock. Okay? That's all that is. And if I am thinking that the stock is going to come down, I buy a put. Okay? And that's it. That's like shorting a stock. That's betting a stock will go down. Well, it's the same thing. Okay? So disregard all of these other strategies. We're not going to learn those because you do not need them. They're a complete waste of time in my eyes. And they do have the reasons why they do have these strategies. They are there for a reason, but they do not apply to the trick trade strategy. This is a very simple strategy that is going to net you huge gains. Okay. So, for example, on Thursday, I'll read off the gains that I made. And when I'm talking percentage gains, that's how much of my position, my money that I put in. Okay. So Facebook 250%, Apple 125%, Amazon 320%, and a secondary Apple trade for 48%. And had I held Apple just a little bit longer, I had a headache and I wanted to go for a nap, to be quite honest, it would have been over 100%. Okay. And that's amazing. That's life-changing stuff. So, if you had a position for $1,000, okay, you only put $1,000 in. On Facebook, I would have made 2,500 free and clear. Apple, I would have made 1,025 or 1,250. Okay, profit. That's all profit. That's not after we take away or after we put in our money, right? Amazon 320%. So that would have been $3,200 off of 1,000. And Apple 48%, which is $480. You guys see the potential? And that's not a lot of money in now, is it? I'm sure we all can afford to put $1,000 in on a position, especially when we're used to trading these stocks. Just one share of Amazon is over $2,000 right now. Okay, so it really puts things into perspective like that. And there are risks associated with options, but the way I trade these, it really limits risk. So, like I said, that was just an example of the potential, and we're going to go over these setups. But I think we're going to have to go over a little bit of terminology here first. So, calls. I'll go over that again. Calls. So, basically, what a call is you buy a call in hopes that the stock will go up. It's just like going long a stock. It would be like buying the underlying, okay? And the underlying refers to the actual stock. Amazon is the underlying of the Amazon options, okay? Now, traditionally, options are insurance, okay? And how you would traditionally trade them. A lot of big wigs, if they are long a stock, they will go short on the option side. It just protects them, okay? We don't trade options like that at all. Okay. We aren't even really trading options, to be honest. I know that's a little bit of a mind melt, but I don't consider myself an options trader. It's kind of funny. We're trading the underlying, guys, okay? So we're using the stock and we're using options, calls, and puts to accelerate our gains. That's why I call it the accelerator strategy, because we're not trading these in a traditional sense. So calls are if you're betting that the stock will go up, and puts are betting the stock will go down. Okay? Strike price. So the strike price is the price. You see this white line, right? Now that is from this, the 210 strike. Okay? Now, for us, strike price, I mean, it's important, but it's not as important as most options traders will in their strategies. With my strategy, I'll show you how to price the option, meaning what strike price to choose, okay? But we'll get to that. But the strike price is just the price of the option that you are looking at, okay? And there's a bunch of different strike prices. And this will all be explained later on. I have a super simple way of pricing the option that I know you guys are going to love. It's super simple. So that's the name of the game, guys. Keep it simple and you'll be profitable. The ones that overcomplicate things, guys, man, first of all, I think that they do that to make themselves sound smarter than what they are. Number two, it's because they're not comfortable with themselves. They have to, again, boils down to making themselves sound smarter than what they are. And number three, I think they do that to to have you under their thumb as a guru or as an educator. They want to always kind of keep you dumb, I guess, right? And we don't do that here at Trick Trade. So those are calls and puts, and that's a strike. Delta Delta will be important too. That's the only other Greek. That's the only Greek I use, guys, is delta. Okay. So what delta is okay. So I just want to make sure that I'm not going to fumble that up. All right. So delta is important because it'll let you know how much the option premium is going to move, meaning when you buy it, okay, and the price is 22.50, how much this is going to move, all right? So with a delta of 53 cents, that's all this is, okay? Cents. 53, okay? If Amazon goes up in your favor $1, 1 point per share, you will make 53 cents on that price. So the price, if Amazon moves up 1 point per share on the underlying on the stock, where you bought in at 22.50, it will now be 23.03. You would have made 53 cents. Okay? Simple enough. Now we'll go over one more example. Just let me get rid of this because I have options charts all set up, and we'll just make it nice and easy. Apple. Okay. Now I want to use some lower priced options just to make it really click in at how big the potential is, okay? So, Apple, if you bought the 230 calls, okay, at 155, or you would have bought on the offer, let's say, at 159, okay? And Apple stock moved up 1 point per share. So it's at 227.93 and it went up to 228.93. You would make, since the delta is 25 cents, you would make 25 cents on this premium. Okay? Now, most of the time here, a lot of these, you want to try and find the higher delta. Okay? I don't necessarily focus on that because I'm betting that these stocks are going to have explosive moves. So when you do that, the closer they get to this strike price, okay, so the 230 strike, right, is way up here. As Apple starts running up into that, this delta is going to increase, okay? So a lot of these deltas, they'll go to $1. So if the delta was $1 and Apple went from 227.93 all the way up to 228.93 and moved 1 point per share, where you bought in at 159, you would have went in, you would have made $1 and it would be 259. Okay, that's how much your premium would be worth. And the premium is just how much you're paying for the option. Okay? So now when you buy an option, we'll break out a calculator here because I want to show you guys. And I know this is it's still a lot of information, although this is a very simple strategy, guys. It's still a lot of information. So just watch this a couple of times. Watch the key points a couple of times and you will be good to go. Because I know as soon as people start talking options, their eyes roll in the back of their head. Don't worry about it, guys. I really don't use Delta even too much either. Okay? So don't worry about it. So now when you go to buy an option, okay? And I'll get more in depth with this. I just want to give you guys a quick rundown so as we move forward you kind of grasp the idea, okay? So when you buy an option, let's say you buy the 230s, okay? At 159. You're buying one contract is 100 shares. Okay? You're buying 100 shares of Apple in one contract. Okay? So you got to times this by 100. So if you bought one contract of the 230, the Apple 230s, okay, and you hit the offer to get in at 159, $1.59, this would cost you, one contract would cost you $159, okay? And on that $159, that's the most you could ever lose. If this premium went down to worthless, zero, okay, and they do on expiry day, okay, you would lose $159. That's all that you can lose. But your gains are unlimited. Okay? Even off of one contract, guys, you can make some decent money. Because, like I pointed out earlier, my gains on Facebook and Apple and Amazon were all over 100%. So to risk $159 and then you could make double and triple that, okay? So 159 times 3, because I made 300%, over 300%. You could have made 477 bucks just off one contract, right? Like, do you know what I mean? So it's, and Amazon premiums are way more expensive than that. So what you would have made way more on Amazon, but I think it kind of shows you that the potential is there. You can make a lot of money very quickly with options, but you got to be safe. So now how do I actually trade these? Well, I trade 4 or 5 very very basic setups. They're basic setups, and that's it. So before we move any further into the options end, I'm going to show you the trick trade setups. Okay, in order to trade options the trick trades way, with the trick trade strategy, you need to become proficient in the trick trade setups. Our strategy, our overall equity strategy. Remember, like I said in the previous chapter, I don't trade options as if they are options. We are basically trading the equity. And there's about 4 or 5 uh, setups. They're very easy setups on the equity side. So we'll get into those. But remember, in order to trade this option strategy, you must first become proficient in trading these setups. Okay. Now, that's going to determine your success. They're very simple setups, and I know that you guys will be able to do it. You just have to focus and be very patient. Okay. Remember, we're not scalping pennies. We're looking to hammer points here. Okay. We look for big, big trades. That's how we roll at Trick Trade. So, first up on the list, we'll go to a double bottom. Okay. Now, a double bottom is a very traditional setup. Now, before I get into these setups and what they all are, I just want to let you know that yes, I'm a technical trader. Okay. I trade based off of technicals and off of levels and support and resistance. These setups, although very simple, there's a reason why they work a high percentage of the time. They're not going to work 100% of the time, but most of these setups will work 70 to 90% of the time. More like 70 to 80% of the time. Okay? Which is very good. The reason why they work, and it's not just because they're a technical setup, they are a psychological setup. Now, I want to get into a little bit of psychology, market psychology first before we move on, so then you guys really fully understand this. These setups work very well on these stocks, market leading stocks. Now, to make my watch list, I use the S&P 500. So I have 503 stocks that I choose from, okay? But for options, I have a basket of about 12 to 15, maybe 20 stocks that are my go-tos. Those are the ones I really trade. But I still put together an equities watch list, and I use the S&P 500. The reason why I use the S&P 500 is because they're real companies, real stocks. They're not garbage, really manipulated, just shit, right? We don't trade that type of garbage here at Trick Trades. Our edge in the markets is very simple. Our edge is based off of proper stocks working because professionals trade them. Professionals are remember now, professionals are professionals for a reason. Okay? They are professionals because they follow rules and strict guidelines. They need these stocks to prove themselves, okay, before they put in their money. Now remember, folks, professionals aren't trading with, a few hundred or a couple thousand. They're trading with tens, hundreds, even millions of dollars, okay? Like tens of thousands, hundreds of thousands, millions of dollars in one position. Okay? So they need these stocks to prove themselves. All right? Now, what I mean by proving themselves is it holding a double bottom or holding a higher low or a lower high or, you know, it needs to prove itself. This was a trade that I called out in Trick Trades chat, the double bottom on Tesla, and some members caught it for some very nice upside. Now, on the equity side of things, could have made over 6 points per share in what, about a half an hour or so? Yeah, about 40 minutes. So, this is a double bottom, okay? Now, do you see how it comes right down to the penny of this last wick? The reason why it works so well, a double bottom especially, a double bottom is my favorite setup. There is the least amount of risk and the highest potential for success. Okay? But on the flip side, it can also be one of the hardest trades to take because to make it a double bottom, the stock needs to fail. It needs to come down. It needs to retrace. It needs to go red. Okay? So that's why it's hard for some new and struggling traders to take a double bottom trade, okay? You need to trust, you really need to trust support and resistance. Okay? It's very, very important that you do that. I got to get rid of this 20. That doesn't belong there. Sorry, guys. All right? And like I said, the reason why it will work a high percentage of the time is because it becomes self-fulfilling. Okay. So a lot of big money, a lot of traders with, large positions, that's why you'll see a volume spike right at that double bottom, right at that previous support. Okay. So what happens is you will have either institutions and banks and bigwig retail traders and guys like us. They will risk off of that double bottom, that support area. Okay. So they will put in their orders to buy as it's coming down. They're going to bet that this is going to hold. Okay. Now, if I zoom in, you can see now, do you see how it's really hard to see? I don't know if you guys are going to be able to see it. You see my support line here? Well, do you see the bottom wick? How it's just like a couple cents just above that line? Okay. That's because traders will set their buy orders just a couple cents above that to make sure that they get a fill. Okay. This is as much of a psychological setup as it is a technical setup. All right. This is important stuff, guys. These are the subtleties. This is how the stock market truly works, really works. Do not look at these charts as candles on a computer screen. This is raw human emotion. And when it comes to emotion, human beings are the most emotional when it comes to two things in life. Okay? Women or men, so love, or money. Okay? Now it's open for debate which one comes first, but money is very important to people, and people get highly emotional over it. So these candles are only emotion. That's how you need to look at these charts, guys. All right? No more looking at these charts as a inanimate object that's on your computer screen. You need to start looking at these stocks as living, breathing animals full of emotion. Now, this can be a tough concept at first to get, but I'm sure quite a few of you that are listening to this are, I get that. That makes sense. Because it is. Money and emotion are hand in hand. That's when human beings are the most emotional. So that's why these setups work. People want to limit their risk. That's all you can do as a trader, guys, is limit your risk. All right. It's not about you know, predicting a stock's movement or anything like that. It has to do with managing your risk, and it becomes self-fulfilling. So the best price that you could get on Tesla if you wanted to go long is wait for a sell-off, wait for a bounce, a nice retracement, and then let it sell back off and let it prove itself on that double bottom. Okay? And it held, and you can see with this bottom wick, it started to get sucked up. That means there's a lot, and the volume too, right? That's a lot of volume. It bounced because there are a bunch of traders betting that this will hold. Double bottoms are pretty hard to break, guys. Okay, support after a big sell-off. Okay, after a big sell-off, it's hard to break. Okay. Now, I've got it on the 2-minute chart only because I want to be able to show you guys TC2000. You can't go back too far on the 1-minute chart. I trade based off of the 1-minute chart. I want to let you guys know, but this setup still was valid on the 1-minute chart as well. Okay, so I just wanted to point that out. So that's the double bottom. All right. So when it sells off, you can mark low of day on the bounce as it comes back in, and you see it start to hold. Now, you don't necessarily need to put a buy order right at support. I'm not saying to do that. But once you see it going green and it's holding, because it's going to do one of two things right at that area. It's either going to hold or it's going to fail miserably. So once you see that it's holding, take that trade, okay? You need to trust support and resistance. You need to. It's important. It's also right at a whole number, 298, okay? It's just below that, but you got to remember it's also a $300 stock, so a few cents underneath that 298 is perfectly fine. You can see once you come up a little bit, it's right at that 298. So remember that, guys. Double bottom, it's my favorite setup. Apple, just as a heads up, Apple loves the double bottom, okay? You can pretty well get a double bottom on Apple almost every day, like almost every day, okay? So that's the double bottom, and what you would do is you would get in, okay, on the hold of support, and then set your stop for just a few cents below this support line. If it cracks that, it could just be a fake out and then come right back up. So you just want to give it a few cents, right? You want to give it a little bit of wiggle room. Not much. Do not bag hold these things. Once they crack, just like, you know, you got to get out, okay? So that's the double bottom. So remember, moving forward, I'm not going to discuss the psychology of each and every setup, but I will go into a little bit of detail with it, but that's the psychology behind it. These institutions and these people with money, these traders with money, they need these stocks to prove themselves. And once it proves itself, that's when the buying will it comes in. You need to trust that. Okay, so that's a double bottom. Get proficient in that. And now let's go to a higher low. Okay. Now there's a couple different types of higher lows. There's a longer time frame higher low, and then there's a short time frame higher low. And Apple gives us a really nice. I'll go back to the 1 minute here. Apple gives us a really nice example of both of those. Okay, so the longer term higher low is right here. Okay. Now, like I said, Apple loves double bottoms, and if we'll zoom in here so then you guys can really see. Now you can see this bottom wick, right? It got bought up, came down, tested the 50 EMA on the 1 minute, and then came up. Now, when you put your support line across, we'll make two supports, okay? So we got low of day, and then we also have the opening price. Now, do you see where it came down and tested and held? That's a support area. That's very important. The opening price. The open is it's very key. So remember that moving forward. Okay. So Apple, once it kind of did its thing, if you miss this move, it'll generally give you another entry. Okay. Now, Apple might have faked you out a little bit on this kind of double bottom because you can see these wicks how it got bought up. And then it took off, but then it kind of got stuffed down. The market was a little sketchy there on Friday. This is from Friday, August 31st, 2018. So the market was pretty up and down. President Trump had come out with some tariff talk from the day before, so the market was still a little freaked out about it, a little fakey, but wait for these stocks to really prove themselves and really set up. Now, what I mean by that is you need to be very, 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 very patient, okay? And if you're watching and stalking these stocks and it comes down to, a key support level, take the trade. Take the trade. Okay, it also gave you another opportunity with another higher low. But the first higher low here that we're going to discuss is the longer time higher low, or because it is a higher low, but it is also kind of like a double bottom. This one's kind of a somewhere in between. But regardless, you could take the trade, you could risk off of low of day, and that's it, right? So that's a double bottom slash higher low. Sometimes I'll refer to it like that, okay? Because both setups are kind of there, right? But technically it is a higher low. And the reason why higher lows work, I will get into a little bit of psychology with this one. The reason why higher lows work is people are anticipating that the stock will keep going up. So they want to make sure that they don't miss their fill. Okay? They want to get filled on this. They know they need in. So they will start in here. And then they'll add as it confirms. You can see as it's confirming, you get that extra volume, right? So traders are noticing that it's going to work. And that's because buyers are coming to a level that is higher than the previous, right? They don't want to buy down here. They want to make sure they get in. It's almost like not a feeding frenzy. I don't want to say it like that, but it's it's along those lines. You understand? They want to make sure because they're anticipating a big move, and it's not like it got a huge move, but it definitely did have a really nice trade in it. So from your entry up to highs here was 2 points per share, which is a great trade. Okay, and on the option side of thing, this was probably 50%. We'll get into the options percentages and everything else, but I need to show you that we are trading these options as an equity. We're not really trading them. So remember these setups, because this is how we take our options trades, guys. Okay. So this is the longer time frame kind of double bottom slash higher low. And then we have the short term. Okay. So we get a sell off, we get a big retracement, and then it finds some bottom. It finds a base or a bottom at some support, and we have support from the opening price, morning open, right? So as it comes down, it doesn't have the weakness to come down and test lows. This means there's too many buyers that want to get in, so it bounces, and that's why the shorter term higher low is great. Okay, these setups work amazing, guys. You got to trust me on this. If you haven't traded setups like this or anything, you got to trust it, because there's a lot of psychology in it. And it's human nature, and you can't get away from human nature, okay? So, this is a higher low, and then this is a higher low. But two different types of higher lows, okay? So you would enter here, take profits on your first pop. You always want to lock in, and then you kind of let the rest run. You can add in on a dip, on your first dip, to put back on what you just took off for profit, or you can just let it run, and that's fine. Okay. So that's the higher low. All right. Now you can see that Apple got stuffed right at some resistance, right? So I would definitely be getting out right here on this stuff move. Okay. It's not a huge stuff because it wasn't a ton of volume or anything, but you can see that there's sellers sitting there, guys. There's some sellers sitting there. It's right at resistance. We got time of day. It's a little bit after lunchtime on a Friday before a long weekend. It's most likely not going to go higher. That's about it. Can it? Sure it can. These stocks can do whatever they want, but so that's the higher low. Now we're also going to use Apple as another example. Now the first VWAP tag or a VWAP tag. Now the VWAP is this orange dash line, okay? VWAP stands for volume weighted average price, okay? Now, so what the VWAP is, and I'll make this, I'll put it in layman's terms. That's how I like speaking. It's the best way to teach. So basically, what the VWAP is it's an indicator that is in real time. Although all indicators are lagging, this one it's fairly quick. There's not like a 9 EMA when it's 9 periods back, or a 50 that are 50 periods back. Like, you know what I mean? Like, it's pretty current. And what this tells us is this is almost like a line in the sand. It lets you know whether the traders on the day are either green on their positions or red on their positions. Okay? So above the VWAP, traders are happy. They are above water. Below the VWAP, traders are not happy. They are underwater and most likely red on their positions. The average trader of Apple for the day, as soon as it dipped below here, you see how it just dipped below this VWAP just a little bit? The majority and average trader that is in on Apple was red on their P&L. Once it came back up, the average or majority trader was green on their P&L. So most people aren't going to sell a large volume of their position if it's still holding the VWAP. Once it goes below the VWAP, and let's say it sells off and then retraces up to the VWAP, right? It's hard for it to come back up and go higher because there's too many people that are selling. So the first VWAP tag is something that I have a million YouTube videos on. Okay, I have a lot of material, even free material. I have members only content material as well on the VWAP. It's very, very important to the trick trade strategy. It's something that we use all the time at Trick Trades, and I use all the time personally. I love the VWAP. It's a great indicator. It actually started out as a mutual fund indicator. Some people will tell you that it started out as a hedge fund indicator. No, that is incorrect. It was a mutual fund indicator, and it has caught on in the retail market. So the first VWAP tag. Now there's a couple. Okay. Now you got to be pretty quick with this one. This first one. Do you see how it quickly comes down? All right. And test that. Now you can get in on that. And I do. I'll see that and I'll go long because there's a lot of buyers right at that VWAP. Do you guys see? There's going to be a lot of buyers. That's what these wicks mean. It's getting sucked up. It's getting bought up. And then it pops up and then it retraces, but then it comes back up, right? So you can take it there or you can do it here. Now, sometimes when you see these quick dumps, especially a real big one through the VWAP, that's fine. Don't get too freaked out over that, guys, because it's almost like a parabolic move. It's exhaustion. When you see stuff like this, it'll usually do the opposite right after, and that's what it did. Okay? So this VWAP area, right? Once it dips below, it pulls basically an under over or an over under, however you want to look at it. So it goes under the VWAP and then comes back over. So under and then over. Bases for a bit and then picks its direction. And then boom, you can take it long and you're good to go. Could have caught a 1.5 on that, and this would have been about probably, I don't know, 50%, 60% move on Apple on the option side, somewhere in there, depending, right? But pretty average. With these strategies, guys, I'm telling you, it's going to blow your mind because you're going to be making, on average, 40, 50% trades. 40 or 50% of your money on almost every trade you take. Okay? And you can get as high as my biggest percentage gainer is over 500%. Now that's crazy, and that's just a day trade. You can make more on overnight holds, but you expose yourself to risk, and I'm all about managing risk. So that is the first VWAP tag. Okay. Lots and lots of material I have out there. Okay. So I go more in depth about the VWAP tags in Trick Trades, right? So I just want to give you guys a general overview of our setups. And if you're interested, I would highly recommend coming into Trick Trades and getting educated, properly educated. That way I can spend some time with you and we can really go over these setups. But that's where I would take this. Let it come under. You see the retracement. It pops back up, and it's just sitting there. Once it starts coming in, you see that volume coming in. Take it long. So you would take your options trade right here, right, as it's coming up, and then you'd probably have to risk off these lows, right? But I really wouldn't want to see it come down underneath that VWAP again because it would most likely fail at that point. Okay. A quick little under is fine, and then it's got to come right back over. A break of support isn't scary. It's what it does after that's going to determine what happens with the stock. Okay. So that's the first VWAP. This is the first VWAP tag, but this is also a VWAP tag. This one's pretty hard for you guys to catch. I don't expect you guys to catch that one. Okay. You got to be pretty skilled and pretty fast. All right. But this one should have definitely nailed. Now we're going to start looking at some short setups. So to go short or buy puts, you're going to need a couple of setups for that. So let me... Okay. So since we're discussing the VWAP tag, I'll pull in this. Now this is just an old reference, but it's a beautiful it's a beautiful example because it gives us a couple examples. We have a VWAP tag here, but if you can see, do you see this top wick, this wick on this one here? Okay, that would be the first VWAP tag. Now it's you got to be pretty quick to catch that, but there are indicators and subtleties that this is going to come down lower. So you very easily could have caught something like this. These are trades that we take at Trick Trades all the time. You can see it pre-market here. It's starting to roll over. Looks really weak, right? And then it dumps, but then it retraces and gets stuffed because it's all wick. That's a good indicator that this thing is done. She's going to pull back, so take it. Take that trade, risk on the opening price, and that's it. Take that trade. So you would buy your puts right here, and then just let it work. And then let's say you miss that, okay? Now that it's based and it's come up, comes into VWAP, and it can't get back over. So take your put options here. Buy your puts right here. Take the trade right here. Risk a little bit over VWAP, and that's it. Okay? And then you would have made a mint. Now, I don't trade TMUS on the option side. Like I said, I trade about 12 to 15 stocks, and that's it. But the setup is, it's pretty nice right here. Okay, now we'll get into another short setup. One of my favorites is the double top. Okay, a double top is a great setup, and I'll show you that a trade that I took personally on Thursday, and I hit Amazon for 320%. This thing went up as high as, I think it went up to like 380% or something like that, but um, no, it would have been closer to 400%. I took it off. I took it off just a little bit before the bottom. I took it off right in here. So on Amazon, you can see this double top. Okay, I'll zoom in because there's two double tops here. Okay. Okay. I refer to this as the quick double top. This is the longer double top. Okay. The quick double top it works actually really well, and I find it works well on extended intraday charts. Okay, so when a stock rips and then it pulls back, and it's looking weak, like it's kind of broke trend, the 90 MA, and it's kind of broke trend a little bit. What it'll usually do is exactly what Amazon did. It'll come up and quickly test high of day. You see how it got stuffed once it broke? Okay. Now, there's not a lot of volume on that stuff, so it's technically not a stuff. But you can see that seller's candle. I refer to inverted hammers as seller's candles and a hammer as a buyer's candle. Very, very strong signs, okay? Um, this here, when it comes back up to test highs, I usually say it didn't have the nuts. It didn't have the nuts to break highs. Meaning there's no buyers up there. For the short term, there's no buyers up there. It's not going to go any higher. Okay? And it pulls back. Short it. Short it, short it, short it, short it. Go short or buy puts. Right there. You would have got instant resolution. Now I was in on this and I set a stop, a very, very loose stop because I knew that, or I figured that, you don't want to say I know. I hate that I told you so shit. Or I knew. But a fairly loose stop, and I was going to look for the end of day sell off and the end of day panic, which is exactly what I got. So took it short, bought some puts, And then I took off to the gym. I came back home and it had retraced up in this area, and it was right in here when I got back home. So as it confirmed with a lower high now, right? So I got back home right in this area with the lower high I added, and it worked out beautifully. Right in this area, there was a Trump tweet. Okay, so President Trump tweeted about implementing more, hammering China with tariffs. Okay, either way, I do believe Amazon would have sold off, but it really helped it, and that's why I managed to get 320% on this. All right, beautiful, beautiful, beautiful trade. Made a lot of money with it, more money than people making months of work. Very, very impressive. Um, very happy that I've discovered this strategy. Now, don't get freaked out. You can kind of see like this double bottom type of look, right? Don't worry about that. If it doesn't get back over the 50 EMA, I mean, that's why I use the 50 EMA. Okay. Once it kind of tests that and it starts rolling over, I mean, that's it. This thing's gonna lights out. So when you take this trade, you would risk on high of day and maybe a few more cents just to give it some wiggle room in case it gets stuffed. It pops and then gets stuffed, right? So don't get freaked out if your trade idea is for this to sell off at the end of day or towards the end of day. Don't get freaked out when they retrace. See this as an opportunity to add into your position. You can get a bigger position with the same or less risk. Okay, so remember that don't get freaked out over retracements. That's healthy. That's gonna happen. Hold your ground. If you don't hold your ground and you constantly get freaked out, you're gonna you're 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 never gonna win. Okay. So this was a trade that I took on Thursday, August 30th, and it was a big one, 320%. So that shows you the capabilities of the strategy. And here's the thing, folks. Almost every day, I'm taking a trade and making 100% my money. So if I put in $10,000 into a position, I'll make $10,000 free and clear profit. Now, my general size on a trade is anywhere between 10 and 20,000. Those are my position sizes. You don't need any more than that, and that would be way too much for you guys to start with. But I'm pretty confident with this strategy for you guys. I wouldn't take any more than 5 contracts. Even with 5 contracts, you can make either hundreds or you could make thousands very easily. So you don't need to take massive size, just take it easy. So that's the double top, the quick double top. Okay, I will refer to it. Okay, like in chat, I'll call out. Okay, Amazon quick double top, and everyone in chat knows that's what I'm looking at, right? And then if I were to call out, okay, Amazon double top, that's this is the double top right here, right? It's kind of like a slightly lower high, slight lower high as well, right? Because it does go a little bit over, but I mean, we don't get that technical about it, right? So that was the double top. Now let's say you missed all of that, okay? And you saw it dump and you're like, "Ah, oh, I missed it." Don't chase. Don't ever chase these stocks. I promise you they will give you another setup, okay? They will. I promise you they will. They will. Lower high right here. Take it short, risk on highs. End of story. It really is that simple, guys. A lot of people make trading way more complicated and way more scary than it needs to be. All right? Easy, easy stuff. As soon as it comes up, right? Even before it starts dumping, just take the trade. Just take it short and then risk on high of day. That's it. That's all you got to do. All right? You need to be comfortable with risk. And a way to manage risk is through your position size. All right? So, like I said, hit the double top on this, and I took it off in here. I could have made about another 80% my money had I held on, but I didn't want this to retrace because once it retraces, it's going to retrace quite quickly, as you can see, and this would take away at least 100% of my gains. 100% off, not 100% down to zero or anything like that, right? So if I was at 320% and this retracement happened, it could be my gains would be like 200% or 220% instead of the 3 or 320. So, like I said, that's the double top, and then that's the lower high. Okay, so that's the setup. These are the. There's one more setup in the Trick Trades war chest. This is proprietary to Trick Trades, and this is something that I actually debated whether or not to share with people. But when I started Trick Trades, I wanted to be an open book. I wanted to share everything I know. 99.9% of all educators, day trading educators that are out there, they maybe tell you 70% of the information that they know, and then they hold the last 30 for themselves. So this setup is called the voodoo strategy. Okay, I refer to it as the magic blue line or the voodoo line. This is heavy support and heavy resistance. I'll be honest with you, I don't necessarily know why it works so well. I believe it has to do with institutional and hedge fund traders marking the opening price of pre-market, okay? Because it's generally at 4 a.m. the first tick, okay? And it's usually a low volume tick. It's only like 100 shares or 200 shares. It's very low volume. But I'll tell you, this opening price of pre-market, okay? Now, if you're going to do this, I recommend you getting TC2000 as your charting platform. Not as a brokerage. They do have a brokerage, but don't worry about that. Use it for charting because it plots this voodoo line automatically when you have pre-market data on. Now, like I said, the opening price of pre-market, way over here. See, this one was 100 shares. That's it, at 4:07 a.m. Do you see where it got sucked up? And it's not just because some people may look at this, oh, well, there's other support there. No, sometimes most of the time there isn't. Most of the time it's just one little tick, and that is it. Like I said, I don't know why this works, but Trick Trades members have seen this hundreds of times. This support area work or resistance area work, depending on whether it's above or below. So, how to trade the voodoo line. Now, if there is a quick sell off right at the bell and you got a little bit of distance and it's selling off really quick and it starts coming into the magic blue line or the voodoo line, this line here, take the trade. Chances are it's going to hold. It's amazing, actually. Like I said, I don't know why it works. Okay, guys? I don't care. It works. That's all that matters. And it works in all markets, up markets, down markets, choppy markets. It works. So you can wait for confirmation because it may come down and test it again, but sometimes, especially right out of the gate, it won't give you another chance. It will just instantly see how it gets sucked up like that on this red candle. See how it get that buyer's candle? It gets sucked up and then it rockets from there. Okay. This works very well. I can't stress that enough. And this voodoo strategy is something, this voodoo setup is something that once now that you know about it, you're going to notice it over and over and over again. And if you use Thinkorswim, if you become a Trick Trades member, I'll give you the script for it, but it does plot it automatically for TC2000. And I do recommend just getting TC2000, not only because of that, but because TC2000's charts are a work of art. They're absolutely beautiful. It's the best charting platform out there, period. I've used them for 7 years now. I've used them since literally day one. I love TC2000. Um, but yeah, I just wanted to share that with you guys as another setup. And uh, if you are going to plot it yourself, let's say you're using some other random brokerage for your charts, that's fine. And you're going to plot this line, you can just set like a horizontal line. But you need to make sure that the opening price, like, or that you have pre-market data from 4 a.m. If you only have pre-market data from, let's say, 7 or 8 or 6 a.m., it won't work unless the opening price of pre-market was at that time or after. Okay? That's very important. But now that you know about this voodoo strategy, this voodoo line, it'll blow your mind. You can literally go through chart after chart after chart on the day, and you'll see so many times it just holds this voodoo line. I call it the voodoo line for a reason because it is. It's like voodoo. It's like black magic. It's wizardry. It really is very amazing, very cool to see. And like I said, I don't know why it works, but it does, period. And that's all that matters. Sometimes we just need to accept that things work, and you don't need to dig in any further. Okay. But so how you would play this on AMD on this particular trade, let's say it didn't put in a double bottom here, okay? And right from the voodoo, it went up. Well, with this type of sell-off, we are watching the voodoo line. We call this sort of stuff out at Trick Trades. We will say AMD approaching voodoo. And look where it bounced. It's to the penny, guys. It's amazing. It really is amazing. It's something to see. And it'll completely blow your mind at how well this works. So, like I said, I just wanted to add this one in as well. Setups, folks. Learn these. Remember them. Um, Watch this over and over and over and over and over again. Do some research on your own. Okay. Look at charts. You got to stare at these charts, guys. Stare at these charts until your eyes bleed. All right. If you're not bleeding for this, you'll never make it. This is the stock market is very difficult. Okay. But that's why I believe in simplicity. Simplicity is how I've made my money in the markets. I keep things very simple. Okay. Very simple. And I will make a note that let's say one of these setups that I just went over, like you're not good at it, or you seem to always lose, or you get scared out, or something like that, then don't trade that setup. Only trade setups that fit your personality. Okay. And then in time, you can develop it, right? Because you definitely want you definitely want lots of tools in your toolbox as a professional trader. You need lots of setups and you know, but those are the trick trade setups, folks. So now when we're going over the option side of things, you'll know what I'm talking about when I say a lower high, a higher low, a double top, a double bottom, quick double top, slightly higher low, right? Like all that. You'll know what I'm talking about. But these are the setups, guys. This is how I trade options. Everything I just showed you is how you would trade an option. You buy your calls or buy your puts, depending if you're long or short, and that's it. Okay. Okay, before we get into the actual options and how to place trades and get a little more into detail on that, I just want to go over the daily chart and the importance of it because a lot of people don't realize and they end up like in the last chapter where I discussed all of the setups. They'll take those at random, okay? Just a random double bottom or a random double top, or there's certain either times of day to take them, or for the most part, it really has to do with the daily chart. So I do want to go over that and just show you guys just the importance of the daily chart. So let me get this over. I'm just going to kind of minimize these because it's not important right now. Okay, so we'll just look over a small basket of stocks. stocks that I'm usually watching to trade my options. I keep it a really small basket. Now, you can trade any stock that's out there, and most of them, like the majority of stocks, except for penny stocks, will have options. Some penny stocks still have options, like some small caps, I should say, still have options. But it's mainly, I would go after the large caps and the mid caps because they trade much cleaner. They trade cleaner because despite what you may have been told that large caps are run by institutions and you have no edge. Why would you want to go against all the smartest minds in the industry? Well, the reason why we do that is because they follow the rules. Professional traders follow the rules. So we can ride their wave. We can anticipate their movements. Their movements are different than the retail trader. The retail trader is considered dumb money, so they will, just buy that breakout blindly, and it's not a way to get in. So there are ways to get in though, still with the retail trader mindset mixed in with institutions. Okay, so let's review some charts and I'll just go over my thoughts on the daily chart and whether I would be looking for an options play on them the following day or not, or, we'll get into it. So, Microsoft, I do like this, okay? Now, the reason why I like this is it finally broke out, okay? Now, there is a saying in the stock market and with traders that you always buy stocks making new highs, always. Okay, so at some point volume had already come in on this. This is on a Friday, and that's probably why it sold off and it didn't close up strong because people are going to take profits into the weekend. So now this is something I would be watching for come Monday. Okay. Now, the reason why I'd be watching for is because, like I just said, stocks that make new highs, people buy. Now, you don't want to trade like the masses, but you want to think like the masses because that's where money comes in. Okay. So you would be watching for a trade on this. Now, what type of a setup would make sense for this? What would be the best setup to develop a trade plan around? Okay, that would be a double bottom or the lower high. Sorry, high or low. It's early in the morning, guys. I'm probably going to mess that up a lot. I apologize for that. I do that all the time. So the high or low or the double bottom on this trade. So what would we look for? We would look for it to open up wherever it opens. Okay. Now it could gap up or it could gap down a little bit, but you want to see it sell off first thing in the morning. A lot of new traders will just instantly stop watching because it's like, oh, it didn't break out. It's just going to die. No, professional traders and traders that are about to risk millions of dollars in a position, they want to see a test of lows or this support area. Right? They want to see that because they want the best entry possible. So when they see stocks that sell off out of the gate once the market opens, that's what they want to see. So they would look for a test of lows, and some of them will buy that bounce as soon as it starts to get right at this, let's say 113.80 level. Okay, so they'll some of them will buy, but the real smart ones will wait for it to confirm. And by confirm, I mean a double bottom holding or the higher low being put in. Okay. Now there's psychology around why the double bottom works and why the higher low works. Okay. Because it's proving itself. When these stocks prove themselves, that's when professionals come in. So that's what you would look for on the daily chart. That's how you would line up the daily chart with the intraday chart. That's very important. And I know you guys have heard that before, but I don't know if you realize just how important that really is. It's super important, okay? And that's one of the pieces of the puzzle. You got to have at least two or three pieces of the puzzle in order to put a trade on, Okay, you can't just blindly, because I see a lot of people have problems and they go, well, it was a higher low, or it was a lower high, or it was a double top, or it was a double bottom, but it didn't work. Well, yeah, sometimes they won't work, but what double top are you buying and what double bottom are you buying, and or double top that you're shorting and double bottom that you're buying, and lower high that you're shorting, and higher low that you're going long on. It depends. You need to line it up with the daily chart. You need to put, okay, if you're going to go long, you want to buy stocks that have a potential for a powerful move. And you're going to want to get in at lows, okay, on that setup, on that higher low um, being put in, or the double bottom. That's when you're going to want to get in anticipation of this stock testing highs, potentially testing highs, which would be a good trade in itself. From lows to highs, is almost 2 points. Okay, so that would be on an options trade. That'd be a big trade. Okay, you'd have at least at a minimum 100% winner. Okay, or it potentially breaking out and going higher and testing this 116 level, right? Now, those are the trades that you want to get involved with an options trade. You have to manage your risk. And one of the ways to manage your risk is to line up the daily chart. The daily chart will also give you conviction in the trade, and and it'll help you pull that trigger, because a lot of traders have problems pulling the trigger and putting a trade on. They'll see the setup, but they have no confidence in it, so then the trade ends up passing them by. Okay? And you need that confidence in order to take that trade. So where do you get your confidence? From the daily chart setup, right? This is a good example right here. Perfect example. So we'll mark out the previous high. So let's say here, let's go like this. Sorry, my mouse. I gotta get a new mouse. This thing's driving me nuts. Okay, so where is it? Here. Okay, so the right-hand side of the chart hasn't developed yet, right? So we can see that, first of all, you'd probably want to take a trade back here and you could probably swing it. But we're mainly talking about intraday setups, so day trades on this. Now, you can take a swing trade if you get a proper position and a proper entry on. That's fine. Okay, but we are mainly discussing just day trading options in this video. Okay, so now that the price action is coming up to previous highs, to break out of this range to potentially test these highs. Okay, you're always looking to see where it'll go next, right? This is the day. Okay, so you would have watched here, because it gapped up, this stock gapped up to here. You're going to want to watch for a sell-off, a dip in the morning down to support. Now look where it dipped to. You would see that this was holding and it potentially put in a higher low or a double bottom here, and you would have got long on this to test this level and potentially break out. And look, it did do that. Okay, now this is a little bit off, but the reason why, okay, I'll tell you a little bit of psychology on a side note, market psychology. Most of these, do you see here how it gapped up and sold all the way off? Where did it test? Where did it test? Look at that. You see how it tested and held previous highs? Okay. Here, it didn't quite make it down to lows. Why didn't it? Because it was so close to breaking out. People put their orders in before. They were so scared to miss the move. They didn't want to miss the move, that it was worth it for them to place orders to buy this dip before it hit the previous highs. That's the psychology behind these things when they come off and test previous days, or they don't quite test previous days. You'll find that a lot of these stocks just before the breakout don't quite come down and test previous highs. And then there's a reason for it, like I just said. It's because traders are placing their orders to buy that dip before it tests because they're scared they'll miss the move. Because if you would have placed your order at 109.64 or 109, I don't know, 65, you would have missed this move. You wouldn't have got a fill. Okay? So instead, the majority of these traders place their order at 109.80 or 109.79, right? They were scared to miss this move. And then that dip got bought up. Lots of buyers there. There was more buyers than sellers there, and it popped. And it broke out. Now, had you snipered this entry, you could have taken it for a really nice day trade. I know this doesn't look like much here, but on the option side, it would be at least a 50 to 80% move, maybe more, right? So the ones that snipered this, they probably held overnight. And what happened? That's when this happened. So it's fine if you miss this day, that initial breakout day, you're going to want to see it open. If it opened flat like this, that's fine, right? But if it, let's say it gapped up a little bit, and then sold off, right? It came down, but it didn't. It didn't gap up. It opened flat, but let's say it did. And then came down and tested the previous close. That's where you would get in on this. And now, since it's on breakout and it held those breakout levels, that's where the buyers really come in. And this is your powerful move that you're looking for. So do you see why it's so important to line up the daily chart? That's when you're going to get big, powerful moves. Same with to the short side. So you have a huge candle up. It opened up here. It failed to break those highs. You could have shorted it because it didn't have the nuts, I like to say. It didn't have the nuts. It didn't have the strength to break highs. That's powerful. That's a powerful statement. These are the subtleties of day trading, guys. Okay? This is the stuff that nobody will tell you. And this is the most important stuff. So it didn't have the nuts to break these highs, okay? And then it sold off. And then you'll notice that these stocks will usually gap up a little bit. That's fine. They'll usually, and Amazon's really good for that. Once it starts selling off, it'll gap up in the morning and instantly sell off. Same thing with Microsoft here. That's what it's doing, right? And then that's your big, powerful move, man. So the daily chart is extremely important. Okay. The daily chart is extremely important. So that's why I'm saying here, watch for a test of these lows. Watch for a test of this support area the following day. Let's say this would be on a Monday. Okay. So that's Microsoft. We can look at Tesla here. Tesla looks pretty good too. Okay. So Tesla, and this again, another great short opportunity. We'll talk about the short. So it opened up and it was driving. That would be super extended for it to break highs. Didn't have the nuts to break highs. If this was going to go any higher, it would have at least tested and ticked over, but it didn't have the nuts to break highs. So you would have got in on the lower high and rode this down. And because you had a lot of distance on the trade, you could have held overnight and you would have had like 500, 1,000% move on the option side. And you don't need borrows, and that's the beautiful thing about options, right? There's no PDT in a cash account, and the cash accounts settle in T+1, which means if you took a trade Monday, Tuesday that money is not cleared yet, but Wednesday morning it'll be in for it to be cleared, right? And you don't need large positions in options trades if you have your correct timing, and it's all about being patient. So another way that I would be looking, another trade I'd be looking for come Monday morning would be this one. We had a big strong day up, it gapped up, sold off, which is healthy. This is fine. This is what you want to see. You don't want to see stocks that go straight up. You want to see stocks that recover and then they consolidate. These are just basically consolidation days, right? So it pulled back, nice little flag, back to the moving average. And now there's two ways we could get in on this. We could watch for it wherever it gaps up or down to. Just watch the test of these lows. See what happens. Now it could come down all the way to these lows and still be healthy. Or if it just ramps out of the gate, the break of yesterday's highs, Friday's highs, would be a good way to get in. You need to have some risk on it, but then it would take off, and it's probably going to test the 50 SMA on the daily. And this on the equity side is 14.5 points. So on an options trade, that would be a big trade. Big trade. Okay? We're talking hundreds and hundreds of percent. And you can take all of my setups and all of these trades on the equity side too. This will work. This strategy works for equities as well, not just options. It's just a matter of where you place your trade. Okay? So that's how you line up the daily chart. Now I could go through all of these, right? But that's the idea of it. You need to line the daily chart up. You need to only look for powerful moves. AMD, now if this breaks down, right? If this breaks down, I would look for a short. And if it holds this area, I would look for a long based on the trick trade setups. Okay? See how the intraday chart forms. So, what am I watching for come Monday morning? Well, I have video lessons in the Trick Trades library that show you exactly how to get in the morning and whether to determine long or short. So I'll share that with you. So when the market opens up, okay, the bell goes, the stock is going to do one of two things. It's either going to run or it's going to dump, okay? Now it depends on what it does. So if you're looking for a long, what you want to see is you want to see it dump. You want to see it dump down to test the support area. And it could dump out to here or here. But you want to see a level of support hold. And that's where you swoop in for your long position. Once it puts in, and it proves itself with a higher low or a double bottom. Okay? Now you can take that chance and you can take it right on support. Okay? And then if it doesn't work, you can take it off. And that's fine. And that's fine. So that's what I would look for if I was going to go long, and if I was going to go short, I want to see it rip out of the gate. I want to see it drive up. I want to see it test these highs, maybe even the 32 area. Okay, then that's when I would swoop in and short it down. It's very bizarro world, guys. Okay, it's very bizarro world. When a stock dumps in the morning, you think that's bad. It's not. That's what you want to see is a long. Okay, you need to wrap your head around that. So that's what I would be looking for on AMD. It depends on what it does out of the gate. I don't have a bias. I don't care whether I go long or go short, guys. So whether I buy calls or I buy puts. Puts to short, calls to go long. Baba, I wouldn't be interested in that. NVIDIA, you could watch for support to hold one more time to prove itself, but I think it's going to get into a consolidation, right? I think it's going to start consolidating here. Apple, we could watch for support to hold, but not necessarily what I'm interested in. Intel would be interesting because it remounted, that meaning it went over the 9 EMA, right? And then it came back down and tested the 9 EMA, kind of proving some strength because it's still holding. So I would watch for a test of these lows, right? And then I would get involved on it on the long side if it starts to hold and puts in, a higher low. But my main watches off of this watch list will be Microsoft, Tesla, and AMD. These three stocks, you will catch one of these plays that I'm looking at, if not all of them. You have potential to make a lot of money very quickly with these setups and with this mindset and this strategy. Okay? It really is that simple, guys. It really is that simple. You're probably asking, "Oh, well, he's probably not telling us something." No, that's it. Like that's it. It really is that simple. Okay? So now we'll get into some how to place options trades, like how to actually put the trade on, and you know get into what the charts look like, how they pull back, what you have to watch out for, a lot of the warnings, and I think you guys will enjoy it. So hang tight. Okay, so now we're going to get into more of the option side of things. I'm going to show you guys I'll kind of quickly go through how I would set up charts on TC2000. If you don't have TC2000, I really highly recommend them for a charting service. Number one, it's super inexpensive. To get live options data and live real-time data, it is, I think, $40 or $50 with the options data American. So it's really not that bad. And it also comes with unlimited paper accounts, so you can test out these strategies. Now, I use TC2000 just strictly as charting, and right now I was using Trade Zero, but they just had some problems. So now I'm using Interactive Brokers, and I run DAS Trader Pro through Interactive Brokers. So I'll be giving that a go. But I think for right now, we'll just go over quickly how to set up an options chart so that you can kind of take a look at, if you're trading the one stock. Um, so first off, you can make a watch list, and watch lists are pretty easy to make. We'll quickly make one up here. So you go up to watch list, go up to personal, you hit this little star. We'll call it options 2. Okay. So there we go. Now you just type in the tickers you want. Now, I highly recommend just watching just these stocks. On any given day, they will give you at least a trade or two, right? And like we discussed in the last chapter, we're going to line up the daily chart with the intraday chart. So we will only choose, a small basket to watch the next day, and judging based off of the daily chart, right? So put in Microsoft. Oops. So Microsoft. Now there's another way you can just drag them in. So these were the stocks that I'm mainly interested in, and I always keep an eye on Apple as well because Apple's my bread and butter. So there. Now you have a watch list, right? So that shows you how to make a watch list. Now we'll get rid of these and we'll make them again. So now you have your main screen. Now you'll have to go through TC2000 and set up a whole chart with all your indicators and all that. I'm not going to get into that, but I'll show you how to set up options. So you'll come up here up to charts. Now I have a pre-made chart. Okay. And you can do that as well. So we got to change this to the 1 minute time frame because they trade options on the 1 minute time frame. You're going to come up to this bar here. You're going to go plot the option. That's it. That's all you want to see on this chart. You don't want to see the underlying and the option, okay, or the underlying, which is, Microsoft stock, right? So we just want to see the option. So there. Now we have the option. Hit OK. Now it'll stay on just the equity for right now. So now you right click the chart, you grab it. Oops. Jeez. Of course, right? Right click the chart, go to option chain. Now you have your option chain. Now I keep my option chains extremely simple. I do not get carried away with all the Greeks, but I will put one Greek on. We're going to add a value column, options, and then we're going to put delta. Right? As I've discussed before what delta is. If you don't remember, you can go back and take a look. Now, 100 days, we don't need that. We are day trading these, and so we're trading the weeklies. So you're going to set that for 6 days or 7 days and below. So that'll be giving us just that week's worth of options. And strikes, I want 10 strikes. That's what I find to be nice. You can always find a nice trade within these 10 strikes. And I've got it set to have volume, the highest volume up top. Volume is really important. But the thing is now I'm going to say this, there's a difference between volume and liquidity. And I know that may sound goofy, but there is a difference between volume and liquidity. Okay. So when you look at the volume traded on the day, it doesn't look like much. Okay. Like even when you come down here, it's like, wow, like that's not a lot of contracts traded. And you're right. I mean, it's not. It looks very shitty, right? There's not much going on. But I'll tell you this. The spreads will be bad, number one. Okay, so let's say we take the whole spread out of it all. And the spread is the difference between the bid and the ask, or the bid and the offer, right? So these are actually very liquid. This is where options get a bad name. People look at some of these charts and they're like, oh, they're super illiquid. No, they're not. If you look at the level 2, okay, you will see a ton of size. There's a ton of size in here, just waiting to get bought up, okay? So you don't ever have to worry about liquidity, okay? But you will have tighter spreads, you see? And it still looks like it almost looks like a shitty penny stock chart, right? You know what I mean? But trust me, there is more than enough liquidity to get in and out of these. No problem. Like, no problem. The spreads will be a little crappy, right? And yeah, the spreads are really bad because it's after hours, right? But, and the market's over. So, but yeah, it's very, very important that you guys realize that, okay? So even if you traded, something that has less volume, and I know it looks really bad. I know it does. It looks like garbage. I wouldn't necessarily recommend trading this because the spreads they're going to be horrible, right? And you're going to get chewed up, right? Just on spreads. The moment you initiate a trade, you're going to be down a lot. So don't do that. But I'm saying what I'm saying is these are liquid. Right? There's a certain penny stock guy out there that always warns you to stay away from options because he says they're highly illiquid he says they're highly illiquid. No, they're not. They're actually very liquid. They're very liquid. And you can see it on the level too. You can see how much size is there. There's a ton of size, like tons. I was actually surprised too. To be honest, I was surprised. So I did want to point that out, but that's how I set up. Okay, just a quick chart, right? And you can get fancy. Like I have other setups. I have the 3 options set up, right? Right? where I'll be watching three stocks. So I have the underlying and the option, the underlying, the option, the underlying, the option, and then the options chain, right? And this is pretty illiquid. So maybe we'll switch this to Apple. And then I got to go up here. See, even though this looks like there's, how there's lots of gaps and it's, really crappy. Do you know what I mean? It doesn't look very nice. This is also, they're also puts. Puts are usually, they look more so like this, right? But on calls, they're very liquid, or not, they have lots of volume, right? You see how it's a more stable chart, right? So I did want to point that out. But there, now you can kind of see what's up with the charts and how to set up charts. Now let's get into how to price the option. So what do I mean by that? So when people talk about pricing the option, they're talking about how do they pick their strike price. A lot of people get wrapped up with this, guys. Okay, and I'm about to show you something that I'm going to show you that if you think ahead and you have an idea of where these stocks are going to go, and remember we use the daily chart in order to line that up. That's where you're able to get really powerful moves. Um, and like I said, a lot of people put a lot of weight into how to price the option. Like there are people that sell how they price their options, how do they pick their strike prices, guides just on that for huge money, like a ridiculous amount of money. And it's actually in day trading options, it's very unnecessary because you're just looking for that move, the move that it's going to make intraday, and that's it. Okay, so there's a couple ways that I price options. So first of all, we need to know whether we want to go long or we want to go short. Okay? There's another way if we are going to just be in for a scalp or not. Okay? Now remember, for those of you that haven't traded options before, you may think that in an options trade, this is totally wrong. In an options trade, if you buy one contract, okay, and let's say it costs you $100, if you're wrong, will lose the full $100. No. The second you put an options trade on, you could take it right off, okay? And because of the spread, right? Because there's been bid and ask spread, you would be red, but instead of losing that 100, you would have only lost like $10 or something like that. Like that's just an example, right? So remember, you can get in and out instantly, okay? For profit or loss. So how do I price the option? Simply, number one, I usually will choose a strike that is just one away. So I want to mark this just because this action has already happened, right? So market opens up there. Okay. So that's where it's opening up. All right. Or actually, am I wrong? I can't see. Sorry. Yeah, right in there. Close enough. Close enough. It doesn't matter. So We'll just take it as there. The market opened up there. So are you watching long or are you watching short? If you were watching for a long, let's say, if you were watching for a long, you would choose the 220s or the 220 250s. You want it just within reason, okay? You don't want it way out of the money, okay? So this would be considered like a near the money strike. You don't want something that's way far out of the money. And I'll tell you why in a bit, okay? In one of my warnings. But the reasonable trade, and I was watching this short, I actually hit this short. I traded this exact trade, and I'll show you how I traded it. But so the puts that you'll look for, you can be looking for the 220s. Okay, you see how it's within reason, right? It's within reason. It makes sense that Apple could get to 220 on the short side that day, right? You wouldn't want to pick the 217.50s. So that's way down there. Like that's although it made it there, that's still a big move. It's too big of a move. It's too gamble-ish. It's too much of a gamble. You don't want that, okay? Now, like I said, the reason why you don't want these options, you don't want to choose, you don't want to price the option way too far out of the money is because of time decay. Okay. So time decay, I call it option meltdown. And I'll show you an example of it. So sometimes when, these stocks just consolidate, if you're way too far out of the money, it'll really sell off. Okay. It'll really sell off. And, this here is a 7% sell off. Now, it can get worse. Like I said, it can get a lot worse where you wouldn't have stopped out on the equity, but you can't handle the pain of that option melting down. Okay? You can't handle the pain of it. So I'm going to pause it here and I'm going to set something up so then I can draw something out for you so then I can explain that better. So give me 1 sec. Okay, so I'm going to give you I'm going to draw an example of options meltdown. So I'm going to move this over just so we have a nice clean blank slate, clean canvas to work with, okay? Move this stuff out of the way. So sorry guys, there we go. Okay, this is an example of the stock, and this is an example of the option, okay? So this is how a stock moves, okay? And it's going to be the exact thing that'll happen on the option. So these are the same ticker. This is Apple at the same time. One is the stock chart, one is the options chart, okay? So stock sells off in the morning, bell opens up, sells off, pops up, right? Comes down, puts in a double bottom, okay? This is for a long. So, and then it tests it again, and then it starts coming up, okay? So, an example of options meltdown, if you're too far out of the money, this is what'll happen. It'll sell off, probably come down a little further, and then it'll come up. Now, where it comes to put in a double bottom, right? And then it comes up. But do you see the difference? Now, you wouldn't have stopped out on the equity, on the stock, you wouldn't have stopped out. It held support. There is no support and resistance when it comes to a option. Now, this move here took you past for a 20% negative on your position. Now, that's 20% of your position. Let's say. That's a lot, right? Like, that's a lot. So, when you are too far out of the money, this is what I call meltdown, okay? That's just option meltdown. It's basically time decay working against you. And you'll find on Monday, Tuesday, and Wednesday, it's okay. You won't necessarily get this. You'll get something like this. A little bit, right? And then it comes up. So this isn't too bad. This is only like maybe 5% or something. Negative 5% on your position, which is manageable. That's handleable. That's okay, right? But on Thursday and Friday, especially getting closer to expiration, this option meltdown can get really bad. You won't be able to hold. You won't be able to hold. That's way too much of a risk because let's say this support broke, it'll rocket way down. And yeah, sure, it'll come back up, but now instead of only 20%, you're down 50% of your position. That's an incredibly large loss. You can't be doing that, right? So a way to protect yourself is just to pick the proper strike price. Don't get crazy with these strike prices and trying to predict where they're moving, okay? Can it pay off really big? Yeah, it can. Because if you are way out of the money, those option premiums, right? The price here, the premium, would be very, very cheap. And by the time, if it started making it towards your target, would be a massive percentage gain. But like I said, guys, you can't be holding through that. That's nonsense. So at Trick Trades, we always trade and preach safety and longevity above all else. We're not gunslingers. Gunslingers do not last, folks. Okay? Remember that. Just remember that. So that's when I talk about options meltdown from here forward, that's what I'm referring to. Okay? So make sure that you pick a strike price and you price your option correctly. And it really is that simple. Just choose a strike price that's very close. Okay? That's very close. So if it opens at 221.50, Apple opens up at 221.50 and you're betting short, go to get the 220s or the 219.50s. Maybe at worst, 219.50 you're starting to get a little bit further away, okay? You're starting to get pretty far. I would go with the 220s or the 220.50s, okay? That's how I would price in that option. Because then you're able to hold through consolidations as well. You know, I'll give you another example, actually, of options meltdown, because this is really important. So this is the stock, and this is the same option at the same time of day and the same everything, okay? So you see how Apple just consolidated for, a long time and then moved up? So comes up, pulls back, and then it came up. You're not going to hold through all of this, guys. Don't hold through that crap. Cuz now you made this move on the stock was a nice, 3 points, right? So $3 a share. And on this was a nice 75% gain and maybe more, right? A move like that would be at least 75%, right? And then it sold all the way off and took you to negative 10% or so, right? Let's just say we're just using examples here. And then it came back up. Well, you know what you're going to end up going to do? You're going to sell it right here. You're going to sell it right at the bottom because you can't hold through enough pain. Market makers will do this. They will screw you out of your position left, right, and center. Market makers are very good at what they do. Have you ever noticed how many times that you couldn't hold through in one more second of pain and you sold your position or covered your position? And then what happened? The stock reversed and went in your favor. As a general rule of thumb, people, I'm telling you, you are 1 minute away from success, from having a successful trade, because that's a market maker messing with you. They know the mindset and the mentality of the dumb money. And sorry, folks, but we're the dumb money. We are retail traders, okay? So that's an example of option meltdown as well. You don't want to hold through consolidations if the strike price is out of the money. Now, if this wasn't in the money, option, okay, it would look something like this. It would dip down, right? It would, instead of it consolidating, this is the consolidation line of the stock. This is the stock, right? That's what would happen. So to highs was 75%. And then down to these lows is probably 60%. So you would lose, 15% of your P&L, which is a lot, right? But if you're in the money, you're able to hold through consolidations. If you're not anywhere near and you price you basically price the option wrong and you were going for that home run, you're going to miss the home run. Okay, guys and girls? All right? So don't do that. Don't get greedy. Don't look for the home run. These home runs will happen with this option strategy, guys. I've done it. I've proven it over and over and over again. My average winning trade right now is anywhere between 80 and 100% my money. Meaning if I put in $1,000 position, okay, and my positions are usually anywhere between 10 and 15K right now, I make 100% of that. So I make on a $10,000 position, I make $10,000. And these are very average positions. You can make a lot of money with options, guys. But at the beginning, I need you guys to listen to me, and you need to promise. While you're learning this strategy, you need to trade small. 1 to 3 contracts maximum. That's it. And I'm not talking about 1 to 3 contracts of Amazon where that's going to be, a $6,000 or an $8,000 position. Okay? I'm talking about options in the $1 area. All right? There. So I just wanted to give you an example of options meltdown, okay? And why it's important to price these options properly. Just price the option one strike out of the money, or one strike out. Meaning if it's in the money at 221, go to the 222 or the 222.50s if you're going long, and short, go to the 220 or 222.50s. For the puts. Okay? It really is that simple. Now, a lot of people get crazy with looking at the delta and everything else. And I've explained, yes, delta can help you price the option because you want to make sure that it makes sense. But here's the thing. With delta, the closer it gets to being in the money, like let's say you chose the 219 strikes, the Apple 219s, right? If you came in here and you shorted it, right where I shorted it, and I'll go over my trade. If you shorted it right where I shorted it, those premiums would have cost you next to nothing because it's out of the money, right? They're pretty far. It most likely won't hit 219, okay? So let's say that these premiums cost you, the premium was like 20 cents. So super cheap, right? I usually like to trade options that are in the $1 to $2 area. So let's say you bought these and it was like 20 cents. As it starts coming, that's how you make your big percentage gains, right? So as it starts coming down, it goes from 20 cents up to 40 cents very quickly. So you've made 100% your money, okay? And then from there, it just keeps going and going and going and going. And all of a sudden, now that premium's worth $1 or $1.50 by the time it hits 219, right? So that's where you can make your big home run trades. And there is a way to do that. The only way that I would ever suggest for you guys to choose a strike price that is out of the money is number one, you have to be comfortable with it not working and you taking a loss. Okay? So only if you're comfortable taking a loss. If you're not there yet as a trader, then don't do it. Okay? And then number two, line up the daily chart. Right? Microsoft is a perfect example. I know I keep using this example over and over again, but I like this setup, and we'll see if it works. So if you got in on a double bottom or a higher low, okay, and that strike you would choose if you were going to go long the 114s, okay, because it's a little bit up from your because that's 1350, so you could go with the 114s or the 11450s, okay. So as it comes up and it hits that strike price, that's when your premium is going to start going through the roof. And by meaning, what I mean when I say that is that it's really going to start making you money, okay? But if you chose the 116, okay, if you chose the 116, way down here, you're not making any money. It's just going to sit there and it's going to chop. And as it starts coming up, then that's when you're going to make 3, 4, 500% your money. If it gets to that. But that's where lining up the daily chart is so important because you can anticipate those big moves. So that's just some food for thought, folks. But for the trick trades, accelerator strategy, just choose a strike price, a strike that is just one out of what the price is right now, right? Also, look at your volume. Volume's going to be it's not super important like I've picked out, but you can really see that, guys, when the bell goes, you'll see which strikes people are going after, right? So piggyback off of other people's intel and other people's knowledge, right? If you see the 115 strikes getting bought up, that means people, they agree with you. They think it's going to go, okay? They think it's going to have a big, powerful day, right? So, that being said, guys, don't put too much crazy weight into pricing your option. People overthink this, okay? Now, I know everything I just said, and I want you to use that, but I'm going to tell you something. Did you know that you probably could have on here, we'll go back to Apple because we've been talking about that one. Command. Now, if you were going to short this, okay, do you know that you could have shorted it here and then chose, like, let's say the 210 puts and you still would have made money? It still would have moved on the chart. And it's funny because look, that has the most volume. These are the 210s. This is where you get your big percentage gains, right? So it had a 100% move. So from where I shorted it, if I would have held till the end of the day, that would have been almost a 100% move, right? So that's Actually, it would have been more. That's because the weekly actually expired. So this is next week's, the upcoming week's options. So you're not, that's, now I know why I wasn't seeing that meltdown like I should have, because it was a Friday. Fridays, Thursdays, and Fridays, you're going to have way more meltdown, especially Fridays. If that trade isn't working, don't hold it, okay? So I'll go over that in my warning section because I've got a lot of warnings. These things can be, they can be dangerous, all right? So, but that's how you price the option, okay? That it really is that simple. Don't overthink it. Like that's what I'm saying. Like the 210s still would have made you money, okay? And they're way out of the money. But to be safe and avoid meltdown, just stick with one strikeout. That's it. So like I said, I'll go over that one more time just to be very clear. Apple opens up at 221.50 ish, okay? If you're going long, you would choose the 222.50s. And if you're going short, you would choose the 220.50s. Okay? Simple. That's it. That's it. That's all. That's it. That's all. And at best or at worst, you could choose the 223s to go long and the 219.50s to go short. Like something like that, guys. Like at worst, don't get carried away with being way out of the money. I know they look cheap, okay? They look cheap, and if they come in, it'll be a nice lotto, okay? It's like a lotto play. Don't do that. We don't take lotto plays. We only take sound trades. We don't gamble with our money, guys, okay? You've worked hard for your money. Keep it. That's why you're here, learning from the best, okay? So that's it. That's all. That's how you price your option. Okay, now I'm going to give you guys an example of a trade that I took that I was referring to in the previous chapter. So the reason why I have my screen kind of split apart here is because I'm gonna pull in three separate brokers and three separate orders just to kind of show you how I would get in on something like this. Okay. So, and I'll go over some trade examples and, let you know how to get in on the trades based on those setups. And yeah, we'll just kind of jam here. So on Apple, I traded this on Friday, and I'll get zoomed in a little bit here. I'll kind of pull these down just so then they're or over at least, so it's not quite in the way. Just give me a sec here, guys. Jeez. Okay, so we'll get zoomed in on the actual play. So you can see here that, Apple, go to the daily chart here first. And it keeps failing to get over the 20 SMA on the daily chart, okay? It also looks very heavy. So pulled back, tried to test highs, didn't have the nuts to do that. Started selling off again, put in a double bottom, but really nice bounce, but then, pretty weak, right? So it's looking overall pretty weak. And it couldn't get over the 20 SMA in the morning. And just overall looks pretty weak. So I was looking for a short. Okay. Now I was looking for a test of, you can see these pre-market highs. Okay. So these pre-market highs here, you can see it put in the high here at the beginning, at the open of pre-market, and then it tested it again right before the bell and sold off. So I had a pretty good idea that to use pre-market highs as a guide, okay, for the short. And if you want further explanation of the trick trade strategy, you'll have to either join Trick Trades or contact me and we can discuss it further. So Apple came up to test these pre-market highs. This is a trade that I called out in Trick Trades trading room as well, and quite a few people caught it. So this was a very nice trade. So sells off, comes up to test. I wanted to see if it would break over these pre-market highs. It did. You can see how well it just quickly got hammered back down. It stuffed back down. It rejected those highs, right? And I'll zoom in just so you can really see those candles, all right? So, and it was also very heavy. Now, sometimes when you're reviewing intraday charts, you don't see how it really got there. Okay, you can't see that this was very heavy, but when it was moving up. Now, by heavy, I mean it was very. These candles were struggling. They were struggling. It was very heavy, and that's the reason why I had a lot of conviction in this trade because it just was moving so heavy. So as it came up to a resistance, a very heavy resistance area, pre-market highs is a very sound resistance area. It's pretty safe to say that it's not going to get over that. And if it does break that, then you either you wouldn't take the trade or you would get out of your position if you were already in. Okay. So on this, as soon as it kind of put in this doji and it tested one more time and got hammered back down, and it looks like it rejected really fast, it didn't. It came up to test these highs and then it's kind of slowly came down. That's when I got in. Okay. So how did I get in? How did I place my orders? Well, I'll show you. So, duh, 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 we'll start with trade zero here. So Trade Zero is a very simple platform, but I kind of like that. I like to do things that are and use tools that are very simple. I don't like things that are very overly complicated. It's just there's too much going on. So I'll just give you an example with this. So we'll plug in Apple. Okay. Now, because it's expired, because that was on a Friday, it might not quite work out exactly. So it is what it is, okay? So let's secure. Where is it? There it is. So this is the put side. Now I only take simple calls and simple puts. Okay. Now that's just to keep it nice and easy. You can sell to open, so it's almost like you can short on the call side, but I buy to open and I sell to close. That's just how I do it. Okay. Now there are a couple other strategies that are involved that you can sell to open, which you would sell a call first. It's like almost like a true short, right? How you would sell shares to short to for like in an equity. It's the same idea, but I just buy calls or I buy puts. So I bought puts betting that the stock would come down, and it did. So the 220s, okay, it loads up. All right. Now, there's a couple ways that you can do this, okay? So if the spreads are tight and your broker is usually pretty good with market orders, and you're just using small size, like they're not going to really screw you on small size, right? You can just mark it in. Okay. Now I know what you're saying. Oh yeah, market orders, they're no good. No, I agree. But if you're trading with really small size, okay, if you're trading with really small size, you're gonna get filled a decent fill. You're not gonna get hammered. Okay, they're gonna fill you basically at the uh, the best bid or the best offer, right? They will. They're not going to screw you. Now it depends. Maybe you've never had like with your broker, you might have a really crappy fill on a market order, but for the most part, depending how much time I have to get in, I will either market in or I'll limit in. So we'll just go over just a market order first. So like I said, all you got to do is you double click on that and then you get how many shares you want, so or contracts. Let's say you only want 3 contracts, okay? So then you would just buy to open, okay? And that's it. In. That's it. So in order to limit in, okay, now your limit price, sorry guys, you want to hit the bid, right? But that's how we would normally short, right? So you normally short when you're shorting an equity, you would hit the bid to get in an instant fill. But because you're buying the put, right? It's like going long. So the ask is at 4. So then just type in 4. Oops, I didn't put the decimal. Sorry, guys. That's it. Buy to open. Boom, done. In. Okay. It's pretty fast to set up orders. Like once you get comfortable with your platform, it's not a big deal. Okay. So there you go. That's how you would get in with Trade Zero. And I know some of this might be a little elementary for some of you guys, but that's okay. We got time. Okay, so now this is DAS. Same idea. It almost looks the same, right? Oops. One sec here. Now this one won't work because it's reading 0 because it's on the weekend, right? But same idea. So the 220s, and with this, if you were to limit in, see how it's on Smart L? That's limit. So the 220s, you would hit the offer, and then it would load the price in, but because it's after, I mean, it's showing 0, right? So, and then you would buy to open, and that's it. Okay. So I mean that's really as easy as it is. So I'll show you that, and now we'll do this here too now. Okay. Now this is Interactive Brokers. Okay. Now we got to get this going in here too. And then you would have the 220 puts. There. Loads it in. You can put your quantity, right? So 3. And then buy. Just hit buy. And then you would be in. Okay. So I just wanted to kind of go in a little bit of order entry with you guys. And it really is that simple. A lot of people make order entry very, very difficult. And so now we'll discuss how we would manage this trade. Okay. So let me get this stuff moved back over here. 2 seconds, folks. 2 seconds. Okay. So there you have it. That's now we're in on the trade. Okay. So how do you take profits? Let's get this so then you guys can see the option. Sorry, guys. That's option 2. We need the chain. We need to go back to puts. 220s. Yeah. Okay. Now I'm sure you guys can see this all right. Okay, so which chart do you pay attention to while you're in this trade? Do you pay attention to the equity or do you pay attention to the options chart? Both. Remember, on the options chart, there is no support and resistance. Support and resistance does not work on an options chart. Okay? Remember that. Now, there's some people out there that'll tell you it does. Fuck that. No, it doesn't. All right? Period. No, it doesn't. Okay? So, it is based off of the equity. Remember, guys, okay, and I'm going to say this again. Now, when we're trading options, we're not really trading options. We are trading the stock. We are trading the equity. I don't necessarily consider myself an options trader. I'm an equities trader. I trade stocks. I just place my orders on the options side of things. Okay? We take setups based off of the equity. Okay? That's it. I'm not interested in all the Greeks and everything else. I'm not, because it has no bearing on what we do. Okay? So, we're in the trade now. All right? How do I peel off profits? What do I do? So, first of all, before you even start thinking about profits, your stop is right around here. Okay? You want to give it to the break of highs, because if it comes up, it might fake out. So, you could give it up to a little bit better than 221.50, okay? Just in case it wants to test that half number. So that's your stop. But what's your stop on the option? Okay, what's your stop on the option? Now, as a general rule of thumb, I like to have a stop of about 10 to 15% of my position. Okay? I know that sounds like lots. I know it does. And it is. But here's the thing. When your average trade is 80 to 100%, as long as you're right more than you are wrong, you're good. It's the law of averages, guys. Don't be afraid to lose. Losses will happen. It's okay. Okay, that's one of the biggest problems that new and struggling traders have. They're so afraid to lose. Don't be. Losses will happen. They happen all the time. Don't let anyone tell you that they have 90 and 100% win rates, because it's either they're full of shit or they're not applying themselves. They're not trying hard enough. Okay, they're not pushing themselves. I could have a 95 or 100% win rate, but I'd be trading so scared that you're not going to make any money, right? So, anyways, that's your stop on the stock. Especially for the stock, you do not want to see that go above. But what do we do for options? Okay. Now, if you use small size, that's where small size comes in handy, because then you can withstand the pain if this decides to come up. Okay? If this stock decides to come up and test this level and then reject. Because on the options, I mean, it would be way down here, right? You know what I mean? And then it would come up. So we don't need to worry about a stop, though, because we didn't get stopped out. The trade worked. The trade worked really well. It rejected pre-market highs. And I get hit with this quite a bit. It's like, well, how do you know? How do you know it's going to reject pre-market highs? Well, I don't. Guys, it's about taking the trade. Just take the trade. Take the trade. It's a sound setup. People say that this type of trading is, it's almost like hindsight trading. No, it's not. Well, how did you know? Well, I don't know. I'll give you a little secret and a little tip here, guys. All professional traders risk their trades and base their trades off of a level. You can take this trade anywhere you want. You could have shorted it here. You could have shorted it here. You could have shorted it here. As long as you're comfortable with risking off of this pre-market level. You could have taken it short right here, which I wouldn't recommend. I'm just trying to make a point. If you're risking off of here, it doesn't matter. We're not looking for a little scalp, okay? We're not looking for this to come down 2 candles and then cover or sell, right? We're looking for it to test low of day and fail. We're looking for a bigger trade. We're not scalpers, guys. We're traders. I'm not a scalper. I have no desire to scalp stocks. Do I scalp from time to time? Sure. But I am a trader. I will trade these stocks. I will trade these options, not scalp. So quit getting hung up on having a perfect entry, okay? Now, with options, I'm telling you, it's important to be patient. You definitely don't want to be shorting here and then risking off highs. You'll get chewed alive, okay? You'll get chewed alive. Your premium it'll melt down on you, okay? But it's about risking off of levels, guys, period. That's it. End of story, end of discussion. I didn't know that this was going to reject. How would I know that? That would be like being able to see the future. If that was the case, I'd be a trillionaire, right? It's about risking off of levels. You want it to come up into that risk and risk off of that. Use this as your guide. That's your guide. That's your risk. You take that trade. Okay? Okay. So we're in the trade. And it starts working. Okay, so now what? Now what do we do? When do we take profits? When do we cover? What do we do? Okay. So we always want to pay ourselves, which means take off a piece of our position to lock in your gains around support and resistance. Okay? So the reason why we want to take some off on support is because there is a chance that Apple will put in a double bottom here and come up and break highs. Excuse me. So that's why you need to pay yourself. So your first cover on this, or your first sell, you would sell a partial position, okay, would be right into support. And that's right where I took some off. I took some off right here, right on this nice big red candle into support. Okay. And then I was patient. At this point, because I've paid myself on the trade, I can give it all the way back up to highs and still be green or a scratch. I've paid for my commissions. And I've locked some in. I made a little bit of pocket money. So that's why you want to pay yourself, because now you can be patient in the trade. Now you don't really care what this does. You're already green, so you're good, right? It'll give you patience, guys. Don't ever hold a full position. Don't do that. I don't care what anybody says. If you do that, as soon as it starts climbing up right here, you're gonna freak out and you're gonna take off the rest of your position, and you would have missed this big move. Okay? So you would have taken, if you took, like I said, 3 contracts, you would have taken off 1 contract. Okay? Now, as it starts dumping here, you could take off some more because this is already a pretty big move. Okay? So from your entry now, right? From your entry up to that candle, okay, to those lows, is 45%. You just made 45% your money, guys. It's that quick. Okay? So you had, because you took 3 contracts, okay? And those contracts costed you, they were $4, right? So that's a $1,200 position. You made, we'll call it 50% for easy math, okay? So you've made $600 at this point. on this nice, simple, easy trade, only off of 3 contracts. Very simple. Very simple. So let's say these contracts were worth $3. Okay. Or sorry, $1. So you bought 3 contracts. That was a $300 position. You would have already locked in and made $150. This is all scalable, guys. What if you put in a $10,000 position? Right? Which is generally what I take. I would have locked in $5,000. It would be less because you've already taken some off here, right? And then now you've taken some off here. So right around this time, it was about, I don't know, about $3,500, something like that, right? So that's what I locked in. And now it bounced, and that's fine because we've already paid ourselves and it doesn't matter. So with this here, this consolidation, when it starts consolidating like this, you don't want it to consolidate very long or else you're going to have to get out, right? Because do you see, here, I'll zoom in because I want to show you guys. Do you see how it starts to melt down, right? From highs down to lows is 13%. That's 13%, right? From highs to lows. And on the equity from highs to the same area of lows is only, 26 cents, which is nothing. You could hold through that no problem, not a big deal. But once you start seeing your percentage and your P&L start going down, sometimes it can mess with your head, okay? I really do recommend covering up your P&L, okay? Take a glance at it at the beginning to make sure that you are on the right side of the trade because sometimes we fat finger trades, and then you can cover it up, right? So then it picks a direction out of this consolidation. This is actually another trade that I called out, a separate trade that I called out because it was consolidating nicely, right? Once it picks a direction, you can take that trade. And sure enough, it worked out really nice. Right? On the equity, it gave you almost a point and a half. And then on the option, it gave you 32, almost 33%. Okay. So because we've paid ourselves right into here, right? So now from our entry up to highs is 72%. Okay. Now you paid yourself once here. You could have paid yourself a second time here because it's come down a lot and it should retrace at some point really soon, right? So you don't want to screw yourself out of any gains. Remember, guys, nobody ever went broke from paying themselves in a trade. Okay, that's the only way that you can lose is if you don't pay yourself. Basically, I see that all the time. So now you have one contract left. So now what do you do? Because it just dumped. Okay, now what do? If you are comfortable with this trade being done right in this area, you can take it off, no problem. But I took it off right here. The higher low. Because that's a universal signal to go long. Okay. Now, it did come up, but then it sold off some more. But that's just how I do it, guys. If I see a higher low on a proper one, I'll take it off. There's no point in sticking around to see what happens, right, on the rest. Because if I would have held it all day, right, which is fine, it would have been a huge, huge, huge move, right? But to sit back through, being up, 70, 75%, and then, holding through all this pullback, It's almost like a 60% pullback or loss, right? From highs down, it's 30, but on your overall. So if, let's say you had more balls than me, I trade safe and I sometimes I'll hold all day, but on a Friday with options, I don't because you'll usually get a lot of meltdown as I discussed previously. So from your entry up to highs, it was 95%, so 100%. It was a 100% trade, right? Hell of a trade. And it really is that simple, right? It really is that simple. So that's how you get in on a put. Okay? That's how we buy puts. Now, I'll just show you here because it takes a different level of an options account to be able to sell to open. Basically, it's almost like a true short. Okay, so let's find the 220 calls, and then it would be like shorting. You want the stock to come down, right? So you can sell to open, and it's a way of shorting instead of buying puts. I know it really sounds all complicated, but it's not, guys. It really isn't. Okay? So that's that. If you wanted to sell calls, you would have shorted it right there. And let's see how that would have worked out. Right down to lows. From highs to lows, it was a 53% move. So buying the puts was a better call. Now, I'll tell you this. When it comes to puts, I'm not a huge fan of puts because there's usually less volume and stuff, and the spreads can be a little, like, not so good. So, but if the market starts pulling back or your trade idea works and it's a good short, you'll usually get really crazy gains. Okay? Like 100, 200, 300, 400, 500, 600, 800, 1000%, right? So, my biggest trade to date percentage wise is about 550%. I can't remember the exact percentage, but it was right around the area of 550% within, a short period of time. These are all day trades, right? And like I said, my average is 100%, 80 to 100%. So the potential is there. So puts can definitely pay off more than buying calls. But buying calls, they're definitely more. There's way more volume in selling to open, like selling a call to short it. So that's just some food for thought there. You can think about that. But it depends if your broker will allow you to sell to open. Okay. Some brokers just won't. They want you to prove that you have been trading options for a long time in order to do that, right? So I know Trade Zero you need to ask and you need to get a different level of options account. So that is how you buy a put. Okay, guys, now we're going to go over how to buy a call. Okay. Now remember, I'm not going to go over a million examples of buying the stock. That's why I showed you guys the setup. So you have all the power in your hands now, and I'm going to show you a perfect trade example on Microsoft and why the trick trade setups work so well. Um, because a lot of these setups aren't just based on technicals. A lot of it has to do with psychology. Okay, there's a reason why, like I went over in the previous chapter, why these stocks they bounce in certain areas and they put in higher lows and the double bottom works is because there's buyers that are going to be sitting there, right? And once it starts to bounce, more buyers will come in to ride that wave. So we're going to use Microsoft now as a really good example. And I'm just going to get this open here a little bit. So Microsoft, beautiful play. This is kind of because this happened Thursday, so I'm gonna have to show the 2 minute chart because I can't go back too far on the 1 minute chart on TC2000. So it's kind of a shame, right? But you guys will get the point. You know what? I'm going to open that up. Oops. Sorry, guys. Okay. So I'll move the order box up top here. And then we'll extend this chart. And then hopefully you guys can see it pretty well. I'll get zoomed in here on that actual day. So remember how I went over that the options chart, they look like they're not they're not liquid. They actually are. You got to remember that, and you got to have faith in that. Now, I'm not talking about the options charts when there's like one tick here and then one tick here and one tick here. Stay away from those. But it's amazing. They're all really liquid. Okay, there's always contracts waiting to get bought and sold. All right, so don't be scared of that. Okay. So on Microsoft the other day on Thursday, like I said, perfect example. And gaps will usually sell off to come back down to test support. Now, where did this come back down to test support? High of day, previous highs, right? You guys see how perfect that is? It's perfect, literally perfect. Okay. So had I been watching this, I would have been all over this like a dirty shirt. So gaps up, pops, drops, starts pulling back, and I would be watching the previous day's highs because the previous day's highs are very close in here, right? So it's not out of the realm of possibilities that it's going to bounce there. Professional traders want these stocks to prove themselves, and this is a perfect example of a stock proving itself. Okay? So remember, this is previous day's highs. So it pops up, it comes down. Now, maybe you would have saw it bouncing right here, and maybe you would have got in a little bit early, but that's okay because your stop should be here, right? Your stop should be here. And let's say the premium really melted down. It didn't enough to where it should have stopped you out because this is the option premium. But let's say you did stop out. Here's the thing. You can always get back in, guys. You can't be afraid to jump back in if the opportunity comes up. So it proves itself, comes all the way right back down to test the previous day's highs, which are right here. It gets sucked up instantly. It pops up. You can see that there's a lot of buyers here, right? More than enough volume in it too. And it confirms nice big candle. On this candle, as soon as I would have saw this, I call this a buyer's candle. Okay? I call that a buyer's candle, and we discussed that as well. I would have been all over this. I would have jumped in on this with as much size as I would have been able to get, and I would have rode this up. Okay, so how do you place your order on something like this? Now remember, these options chains are going to be they're going to be out, right? So because of the expiry, because it's on the weekend. So we would want the shoot, one sec here. Yeah, that kind of sucks. I forgot that I changed some things here. So anyways, the strike, now let me go click back on this. Sorry, guys. So right down in here, right, if we're watching for a bounce at 112 and we're expecting this to come up, we could take the 112.50s or maybe the 113s. I would, because of the price of the stock, I would go with the 112.50s, okay? So let's see if we can find the 112.50s. No, it just has nice round whole numbers. So you can go with the 112s or the 113s, all right? So you go to the put side, right? Sorry. It's been a long day, guys. You go to the call side, and you would have typed in whatever the bid would have been at that time, or the offer, right? So if you want an instant resolution, an instant trade, which on something like this, I would almost suggest marketing in, because you may miss that opportunity, because these premiums, you see how quickly they jump up, right? And we're expecting a bigger move. A lot of people, now here are my thoughts on this, guys. A lot of people get really kind of freaked out over spreads. Here's the thing, we're not scalping, are we? We're not scalping, okay? We're expecting this bigger move. So don't necessarily get too concerned over the spreads. Some people may disagree with that. I don't. I don't worry about the spreads too much, because I'm not expecting this to just come up and test highs and then fail. That's not the trade for me. The trade for me is the breakout. All right? And the breakout was perfect. And remember what I was saying about lining up the daily chart, guys? So I've went over this example over and over and over again, okay? That's why it came down to test those highs, the previous close, okay? It's perfect. It's perfect. It is on breakout. It needs to prove itself. Now, do you guys really see what I was talking about in lining up the daily chart chapter? It's so important. It's so important that you pay attention to the daily chart, because it gapped up over this breakout range. Most of the time, 80% of the time, these will sell off, especially when it's really quick. I have tons of video lessons on this in the Trick Trades video lesson library on how to play earnings gaps and gaps, okay? And it did it again. This happens over and over and over and over again, guys. When there's a small gap, it'll sell off real quick into support, the nearest support, and then bounce. And that's what it did. You need to have faith in that setup. Now, some of you will probably be asking, well, but how do you know it's going to bounce? Guys, cut that mentality out. That's the wrong mentality. You need to have faith in technical analysis, okay? Technical analysis works. A lot of people, they only see the technical side of it. It's not just the technicals, it's the psychological side of it too, okay? These stocks are proving themselves. Have some faith. Have faith and confidence in your strategy, okay? And a large part of our strategy at Trick Trades is technical analysis. I can't say that enough, okay? But how did you know it was going to bounce, Pat? How did you know? Well, it's not about knowing. You need to have faith that it works, because you're going to have a lot of buyers there. It will bounce there. How far up? I don't know. That's a different story. I don't know how high up it's going to bounce. But that's why we set stops. You're not going to have a trade that works all the time, okay? So I'm going to say that again. Have some faith in technical analysis with support and resistance. You need to have faith in that. I can't stress that enough. Okay? So as it comes down to support, right? I don't know what the, like I said, what the bid and the ask would have been, like what the spread would have been. Okay, I'm not sure. I'm really not too sure. Okay, so let's say it was, well, I guess it would have been 126 and then as high as 143 or something like that, right? I would recommend, to be honest, guys, because it's going to pop up very, very quickly on these bounces. I would recommend just mark it in. You want in on a trade like this. You don't want to miss it. It's on breakout. Get in. Get the F in. Okay? Period. I would just mark it in. So on this, we got, I'm going to just show you guys with small size. Okay, so I'm going to use the example with just 3. Okay, with just 3 contracts. I'm not going to show you the size I use. You guys will be taking that and then hit me up. Oh, but I lost fucking tens of thousands of dollars. So there you go. As quick as that. Mark it in with 3, right? And then buy to open. Boom, that's it. Get in. All right. I didn't pick the 112, so there you go. So now you got 3. Boom, buy to open. Hit your confirmation. Done. Some will make you confirm. Some won't. That's it. It's as simple as that, and it's as fast as that, okay? A lot of people think that it's hard to get in, and it's like, oh, I don't know. I've looked at an options chain, and I don't get it. Well, now you guys should be able to say with confidence that you can look at an options chain, and that's it. There's nothing to it. There's nothing to an options chain. Just get rid of all those Greeks. You don't need any of that crap, guys, okay? So you got your symbol, right? Which I know it looks really confusing. Don't worry about it. Just go off the strike price, guys. So we got our strike price, the price of the premium, the volume, how much volume's in the name. And remember, there's a difference between volume and liquidity. And delta. Okay? That's it. The rest of it is nonsense. For day trading options, you don't need to know it. Don't even go search on YouTube on how to day trade options. Guys, I've been there, and it's ridiculous. The amount of stuff that they tell you is nonsense. You don't need to know that. I'm telling you, with this DVD in total, this is all you need to know. This is all I need to know in order to make my trade. So that's all you need to know in order to make your trades. Do not overcomplicate it, okay? Some of you probably think that I'm not sharing something with you. No, it really is that simple. That's it. That's it. That's all. Okay. So now that we're in on the trade, how do we manage this? Okay. So we got 3 contracts, right? Remember, this is scalable. The better you get and the more confidence you have, you can take a lot of contracts here and make a boatload of money. All right. So you need to get good first, though, guys. So it bounces here, and because you market it in, your entry's probably somewhere around here. Okay. So that's your entry. Risking on low of day. Risking on low of day. That's it. Now it starts coming up. So from here to here was a nice about 13, 14, 15%. Okay? You've already made 15% of your money. How many times on even a penny stock have you wanted to make 15% your money? That's pretty good, guys. That's pretty good, right? So that's just the start of it. So from here to here, from all the way up is 62%. And had you got a good fill on your market, or let's say you got a really good fill and you were fast, okay? From here up to highs, 80%. You just made 80% of your money back, right? You made 80% of your money. That's huge. That's a win. That would be like catching a penny stock. Let's say this was a penny stock that had a huge run up of 80% or 100%. You caught 80% of it. You caught basically that whole move, right? And on in penny stock line, you're not going to. You're going to get freaked out. You're not going to hold it. With this, that's just the move. And it gave you no reason to get out until the top, right? So how do we manage this trade? So you're in on the trade. It comes into this resistance, okay? And it's looking pretty strong, right? So you can pay yourself, though. I always pay myself at resistance areas, okay? So I would have paid myself here. And then this little bit of consolidation, I would have sat through no problem. That's fine, right? It looks really, really healthy. It's flagging back, into the 9 EMA area. And then it pops again. So on these really strong pushes, right, I would have taken off some more. Period. Because when stocks go parabolic, they usually dump. This one didn't. It just consolidated. So where would I have gotten out? Now, I wouldn't have sat through all this consolidation. It's too much. Okay? So I would have given it to here, and it's still consolidating. I just would have got out. I'd be like, unless you're comfortable with holding all day, and you would end up maybe if you held overnight, you could have paid on a push. And let's see what happened overnight, okay? Like with your last remaining contract. Okay, so you got in, let's say here, and then all the way up to highs. There you go, 130%. It really is that easy, folks. That's it. That's all. Okay. So I hope that me showing you how to get in, and with a limit order, if you want to use a limit order, you click the, if you want to get in instantly, you want to hit the offer, right? So you hit the ask, you double click that, it would pop up, the price would pop up, and then you hit buy to open. It's that fast. It's not, there's no real big secret, and a lot of people ask me, how do I set my orders? And they think I'm doing something fancy. I'm not. I double click on the mouse and that's it. Or I fumble around. I fumble around with orders all the time, guys. It's not a big deal. Just keep calm, and that's it, right? So, do you guys see the powerful when the powerful moves set up on the daily chart? How to really hammer these? It's all about the daily chart, guys. It really is. You guys got to start focusing on the daily chart. You've been focusing too much on just intraday, only intraday setups. That's why a lot of them fail. And that's why a lot of you get chopped up as well. Because you're not focusing on the daily chart. Focus on that daily chart. All right? So this was a beautiful example of a stock coming into the high of day. Okay? Previous highs getting sucked up. You recognize that buyer's candle, right? Another problem that people have is they'll say, well, what if it fails? It could still keep coming down. Well, okay, take it off then. You guys really complicate things, and you really, a lot of you just think too much, and that's really what's holding a lot of you back, is just thinking too much. Just take it off. If it doesn't work, it doesn't work. You cannot be afraid of losses. I'm gonna do a psychology video for you guys, and you guys are gonna freak out because I've watched a lot of these other. There's a certain guy that put out a psychology DVD, and it's laughable because it's just regurgitated nonsense. You know, a lot of it's just regurgitated nonsense. There's nothing that's new or interesting, right? So I'm gonna do a psychology, the psychology of setups, the psychology of the market. Why these setups work, right? And it's something that I'm going to be working on here shortly. So hope you guys are interested in that. And but that's it for buying puts and buying calls. Don't get caught up, and I'm going to pull this in. I don't care what anybody says, guys. Don't get into these iron butterflies, these iron condors, and these condors, and these butterflies, and these strangles, and straddles, and, vertical calls, vertical puts. Stick with the simple legs. Simple works. Simple pays. And I know a lot of you traders that have already traded options may disagree with me. Oh, but it protects you. I don't care. There's nothing to protect against. You don't need to protect anything. These are simple day trades. They're just day trades. Once you start getting into, crazy swings and stuff like that, crazy swing trades, yeah, maybe, but I don't do that. I make my money every day, and 9 times out of 10, I'm all cash by the end of the day. I don't hold these overnight very often, especially in volatile markets like this. There's no point. There's no point. I made 100% of my money on my money today. Why do I need to make more? Greed is what kills you guys. Greed is what kills you. Greed is what destroys accounts. Don't do it. Okay? Just take your gains and run. You know? If you can make 100% your money almost every day, why wouldn't you take that? What more do you need? I see a lot of options traders that are just they're never satisfied with their gains at the end of the day, and then they wonder why they're red by the end of the day. They were up 5,000 and then they're broke by the end of the day. Quit being greedy. Quit being so greedy. Okay? So I hope you guys enjoyed the buying puts and buying calls. And if if you're thinking, well, you should have went over more and more examples. Well, there's really not much more I can say. I've given you all the setups, right? Where to buy, where to sell. You need to have faith in technical analysis. This isn't hindsight trading. I do this every day. It's about having faith and confidence in these setups, guys. Period. Respect support and resistance because professional traders respect support and resistance. So I hope you guys enjoyed it. Okay, guys. So that pretty well wraps it up, except for this last chapter here. And I'm going to give some warnings about there's some things that you need to know. Okay, it's not all roses and daisies. Okay, so there's a few things that you need to know. And number one, not the most important, but just so you know, because I had this problem when I first started trading options. The reason why I have the SPY chart up is if you're going to trade the SPY, you need to realize that they don't just have weekly options. They have options that expire every couple of days. So you need to be very aware of what is going on. Okay. Now, one of the reasons why you don't want to get caught in expiry is if you buy an option that is in the money, okay, or you have puts on options, calls, whatever. If you have options contracts that are in the money, okay, and you let them expire, you will owe your broker for that amount of shares. Okay. So I'm going to break out a calculator here and show you something. Okay. Let's use Apple as an example now. Okay. Okay. So let's say you bought 10 contracts. You bought 10 contracts of Apple. Okay. And you let them expire and they were in the money. What happens now? Okay. What happens? So 10 contracts times 100 shares per, okay, because there's 100 shares in a contract equals 1,000 shares. You have the equivalent of 1,000 shares, okay? So you let 1,000, now you're holding the bag for 1,000 shares. Do you understand? So Apple closed at 217.66. So let's use that as an example. This is how much you would owe your broker. So 1,000 shares times 217.66. You would owe your broker $217,660. I'm going to repeat that because it's important. You would owe your broker $217,660. Think about that for a second, guys. Not good, right? So let's say your premiums or you're trading a stock like Amazon, a $2,000 stock, and let's say you bought 10 contracts. Do you guys understand where I'm going with this? It would be a $2 million debt. Very important, guys. On expiry day, and I don't care what you have to do to get home. If you leave and you get a flat tire or you're in the hospital or I don't give a shit. You get home at all costs. You get yourself to a computer at all costs and you close that position out. Okay? Now, if they're out of the money, that's another story. They expire worthless. It's not a big deal. Okay? They just expire worthless, and that's it. You don't want to give these positions to expire worthless though, okay? Because that would be like you took 100% loss. But remember though, in options, you can always control your risk. So if you only want to at worst lose $200, you can do that. If you only want to lose a set amount of 1,000 or 5,000, depending on account size and financial whatever, you know, some people can have no problems risking $5,000, right? You got to be comfortable with that loss, all right? So so that's that. That's really important, right? Another really big warning that I give to people is on Thursdays and Fridays. Now, I've discussed this in previous chapters with Option Meltdown. I went over what that means. Okay, so time can work against you very easily. Time decay, okay? And that's the theta. Don't the Greek doesn't matter. You just need to be aware that it exists, all right? So time decay can work against you, especially on Friday, okay? Fridays, I recommend to traders not to even bother trading options. And if you're going to, take the next week's options. All right? Take the next week's options. Because if something goes into consolidation on the intraday chart, it'll really melt down. And every time the stock pulls back, it'll really melt down. Like lots. Thursdays is when it starts kind of getting like time decay really starts coming into play. Monday, Tuesday, Wednesday, it's not that bad, right? It's not that bad. But Thursday and Friday, yes. So if you happen to be swing trading, I'll give you an example. If you happen to be swing trading or something and you think, well, I have until Friday for it to come around. Well, technically you're right, right? Like you are right, but if it's not in the money by then, like pretty slim chance that it's going to come around. You're always best to just cut losses, guys. Okay? You're always best to just cut losses. So there's that. Um, these options, they can move against you very easily. Remember, we are dealing with percentage gains. Okay? So a stock like, here's another warning. I don't recommend for new traders to start trading Amazon contracts. And the reason is because of the premium price. You see the premium price? Because a lot of people will say, and I've heard them say this to me, I only took a few contracts of Amazon. Holy shit, that's a big position, man. Like 3 contracts of Amazon. Okay, so 3 contracts. Let's say you bought the 1907s. You wouldn't. That's way down, right? Actually, it isn't. Sorry, it's not. It's not. Okay, so the 1907s, and they're $30.77. So 30.77 times 100 equals $3,077, and you bought 3 of them. That's a $9,000 position, guys. Okay? Okay, that's a $3,000 position. Or a $9,000 position, sorry. Right? A 10% loss on that. So where we're holding back for our stop out roughly 10 to 15%. That's a $900 loss. That's too much. That's way too much. That's way too much. Okay? Be aware of the price of the option. I recommend for all traders to stick with the $1 range. It's easy to calculate your risk, right? So stick with premiums in the $1 area. You can get premiums for the $1 area on Apple, Facebook, BABA, Nvidia, right? All the big boy stocks for like a buck. All right. Netflix can be expensive. Chipotle can be expensive. Amazon can be expensive. Google can be expensive. Boeing can be expensive. So just remember that. That's a big warning. All right? Be careful of what you're buying. All right? Yeah, be careful of what you're buying. So, there's not that many warnings. It's basically those 3 or 4 warnings. Those are the biggest warnings I can give you. To be very careful with all of that because these will sting you very, very fast. Start small. Another warning I'll give is just start small. Okay? Tino keeps phoning me. So just start small. Learn to be good first. Then the money will come. All right? Become proficient on the equity side of trading first. Learn these setups. Those setups that I went over, those are the bread and butter, okay? That's how I take my options trades. Like in review, that's how I take my options trades. That's it. I take my options trades based off of the equity chart, the stock chart. Like I said before, I don't consider myself necessarily an options trader, guys and girls. I'm a stock trader. All right? I don't talk about all the Greeks because you don't need to know them. One more warning I'll give is stay off YouTube. That's so detrimental to a new trader and a struggling trader's career. It really is. There is so much bad information. There's so much bad information. Like going to look up how to day trade options to get an idea of how your eyes will roll in the back of your head with all the nonsense. I'm telling you, what I just gave you in this guide, that's it. That is all you need to know. Don't search any further. I've made a shitload of money on this strategy. Okay? Like, this is all you need to know. Don't get wrapped up in thinking that there's more to it. There isn't. You don't need to know any of that stuff, guys. I have built a successful career in trading based on simplicity. All right? That's it. Very simple. Very, very simple. So I hope you guys enjoyed this. I hope you learned something. If you need more help with your options trading, come to Trick Trades. Join the mentoring program. I will answer any and all questions. Okay? Go to tricktrades.com and sign up for mentoring. And I'll be with you every step of the way to help you make your full-time trader dreams become a reality. I'll be beside you every step of the way. And we have some amazing new things coming up at Trick Trades, groundbreaking stuff that nobody does, and not how these other guys say they're going to do something different and then they don't. No, I'm talking about I'm very excited. Very excited. So I'll leave it at that, guys. I hope you guys enjoyed it. I hope it wasn't too long for you. We're pushing about three hours, 3.5 hours. But that's it. I'm not one of those guys that makes guides for 8 hours and 10-hour DVDs. That's ridiculous. That's nonsense. Straight and to the point. So review those setups, do your homework, and remember, folks, you're only one trade away.